This Creditors in Commerce classroom session, hereinafter session, is the private exchange of ideas and concepts between the providers and the recipients. The content is not meant as legal advice. The use or attempted use of any idea or procedure discussed in this session as applied to the recipient's own personal transactions, cases, or controversy, or applied to other cases, may or may not result in a favorable outcome or the same outcome as discussed in this session. Each transition or transaction, case, or controversy may be different as a result of unique actions or unique statements made by the parties therein, and each different act or statement in any transaction affects or may affect whether any procedure or idea discussed in this session is relevant to your transaction or that the outcome thereof will be depicted as in this session. The discussion of ideas or procedures in this session is not exhaustive of the subject being discussed. Many ideas and concepts that can affect the outcome of any legal or commercial procedure are not discussed in this session, and the fact that you may not be aware of these issues may have an adverse effect on the outcome of your procedure. It is the responsibility of each party to understand his own transactions and to apply the appropriate and complete concepts necessary for a procedural and substantive remedy thereto. This session may be redistributed privately by any recipient to another recipient requesting them, conditioned upon the fact that this notice is provided therewith. If you have any questions, you may contact Brandon by email at harmony@creditorsincommerce.com or by telephone at 702-866-9077.
Alrighty. Just an announcement, we have March 19th classroom session. I'm not going to be able to be here. I'm going to be on the other side of the country learning to help you guys out some more. So the March 19th I won't be able to make, and so we're going to push the two remaining sessions, session 11 and session 12, up by a week.
Is there a class we should be going to with me?
We could talk about it. If you feel like you'd be interested in it, maybe it'd be something to attend.
Explore.
Yeah, something to explore. And for another announcement for those on the audio or on the downloads who may be attending or looking to attend the second session of the monthly classroom session in Humboldt, that's also been changed from the 21st and 22nd of March to the 28th and 29th of March. Okay. Anyone have anything to share about how being a creditor has radically transformed your life and everything that you do? Or maybe in just one circumstance or situation? Anyone? Anyone on the phone have anything to share?
Hi, this is David.
Hey, David.
Hello. My first time on the call, or second time on the call, but first time to ask anything or make a statement. I've always thought of myself as a creditor. I have really never owed anybody any money ever in my life, and I had a travel trailer I bought that I was going to fix up, an old Airstream, and put it in some RV parking storage. And it's been there for about 3 years, and I got behind in payments quite a bit, and had sent a lump sum last year about this time of $500. Anyway, she called the other day, and I saw the number come up on the phone, and a part of me just was like, I really don't want to talk to her right now. And then I said, no, Dave, you don't shirk your responsibilities. You're a creditor. So I picked up the phone, she said hi, and said, Dave, what are we going to do with this? And I just said, you know what, I'm sending you the title and the keys to it right now. And because she was good to work with, and I did it, and I just felt like, a big weight had been let off my shoulders, because I really never borrowed any money or owed anybody money to anyone except for these people, and it was not a good feeling. So from what I've been listening to with your calls and, Mike Smith, I just like, you know what, dude, you just be a good creditor, and it was a great feeling.
Nice. Thank you. Anyone else? No. All righty. For those of you on the phone, to avoid any background noise, you can mute by hitting *6 so that we don't catch your dog's TV and kids in the background. And then when you want to ask a question, just hit *6 and it'll unmute you. Oh, look at that. We have a dog walk in. Yeah. All righty. I got a question. Why is it you think banks loan money? Because they want more, because the profit in it. Nope and nope. Reason banks loan money. If you are in debt to me, and I am the creditor and you are the debtor, who controls that relationship? The creditor. Now, if the debt you owe to me is secured by some kind of collateral, who controls the collateral? The creditor. It's all about control. Okay? The International. That interesting movie out right now called The International, where the CEO of the bank explains to this Interpol agent how it's not about the money you make from loans. That's not why banks loan money. In fact, they'll take a loss if in the process they're going to gain some kind of a security on the debtor. And this big international bank seems to be modeled after the Bank of International Disputes, which is the central bank. And, yeah, is what it's called in the movie, right?
No. IBCC in the movie.
Okay. IBCC in the movie, okay. BCCI, okay. So, basically, through exercising their control through trading of arms, and they would take a loss as a middleman on the trading of the arms with this nation that's buying the arms from them, because of the control they will be able to exert on the collateral securing that debt. Okay? So, we know that the United States, as well as all the states within the United States, all the cities, all the counties are all bankrupt. Now, the creditors for the United States, if you guys can mute on the phone, *6, or else I'm going to have to kill you. I mean, volume-wise.
By the way, the counties have just collapsed their court system in the state.
Okay, so if the international creditors have a security interest in the United States and all the collateral that the United States holds, all the collateral or property that the states hold, the cities, the counties, that means that the international creditors control the property. Remember we were talking about how what distinguishes a sovereign from someone who is not sovereign? And basically a sovereign is just someone who controls their property. That's it. So if the states, as well as the United States, no longer are in control of the property, they may be in possession of the property, but they are not in control of the property. The international creditors control. Okay? So if we want to change the condition that we're currently under, which is international bankruptcy, what is something we can do? Anyone have any ideas? clear the debt off the books. Remember when the states attempted to secede from the Union in the late 1850s, they couldn't because they hadn't cleared their debts. Okay? If we want to control our property, we must pay off all our debts. And if we are taking responsibility as creditors, then we will be taking responsibility for clearing the debts of the city of Huntington Beach, the county of Orange, the county of Los Angeles, the state of California, the United States, and every other municipal corporate entity that is in debt within the United States. That's if we're just taking responsibility for this nation. Okay? How big of a game do you want to play? Is how big of a game is how far out from your community you're willing to be responsible for. If you're willing to play a really big game, you're going to take on the debts of the world. If you're going to play a smaller game, you may just take on the debts of your local city or county. Remember, we've discussed in previous classes about fractionalizing, how we can multiply our money up to 10 times what we're spending in each year. And as creditors, wanting our sovereignty back, wanting to free our county, our state, and our nation from international bankruptcy, something we could do with these excess funds that we're generating as bankers is buy off the debt. And you can buy off municipal debt, your city's debt by buying municipal bonds, your county's debt by buying your county's municipal bonds, the state's debt by buying California bonds, state of California bonds, and the nation's debt by buying U.S. Treasury bonds. Now, what would it be like if the people of the United States held all the debt? Meaning, we hold all the bonds for all the nation, for all the states, for all the cities, for all the counties. If we hold and control all of the debt and we pay it all off through our ownership of this debt, the international creditors no longer control the United States, and the people, the responsible creditors within the United States, then are pulling the levers and pulling the strings and determining what it is we're going to do with our government funding, whether it is implementing nationwide solar energy or alternative energy systems, whether it's implementing nationwide food banks, whatever your vision is, what you see is missing in the world, you can take control of that public entity which has been established and has all the controls in place to have a very effective or make an effective difference on our world, on our counties, on our state, cities, and the country itself. Okay? So something to keep in mind when we actually start clearing off all the debts, we may want to look at clearing out the debts of our city, clearing out the debts of our county, and clearing up the debts of our nation. If the debt, what's that? Oh, here. I haven't passed out the mics yet. Go ahead.
I understand what you're saying, but at the same time, isn't it only possible if you're able to eliminate the Fed and their interest rates?
Why would we need to eliminate the Fed if we control the Fed?
If you actually own the Fed, yeah, because then you're creating money at no interest.
If we buy up all the debt, that means the United States no longer has a debt to the international creditors, so what's the Fed at that point? It's just a tool, just like the banks. If we start fractionalizing our money and we start becoming the source of all the funds for housing and everything else, we would then control the property, and the banks wouldn't be controlling your property.
As long as you don't use the Treasury instruments to accomplish that.
Again, are you presuming that once the debt is gone that they have control. If there is no debt, there is no control.
As long as they stop creating money. As long as they stop creating money, yes.
We create money. You mean the printing of Federal Reserve notes?
No, the actual bookkeeping means of creating money.
I'm not following you. Right now, the way that money's created, you're thinking that there's something wrong with that system? With the fiat currency?
The fiat currency, yeah.
I say it's the perfect system.
If they were to do a Kennedy-style system where the Congress prints the money and interest-free, wouldn't that be better?
Say that again?
If the Congress prints the money instead of the Fed printing the money at no interest, wouldn't that be a better system?
Are you of the opinion that nationalism is better than a global community?
Yes.
Okay, I'm of the opinion that nationalism is a toxic, dangerous thing. That as soon as you separate people by any means, whether you separate them by nation, in artificial borders, language, culture, religion, color, when you start to separate people, that's when you create contention and warfare. So yeah, if you're attached to being the United States and we're against the world or we're against anyone, then that system is flawed. And yeah, there may be an issue with using a fiat currency that is only based in the United States. But the way I see it, we're a global community now. And that's showing up in the fact that a global government has been created. And it's not that we're a victim to it, it's a reflection of what we are doing. We have a global community now. We interact with people all over the world. We communicate with people all over the world. We care that Burmese kids are making Nikes. And we want to regulate and control that. Okay? That's a global community and a global system of government. Now, is global government good or bad?
For me?
Yeah. Okay. Is your opinion of whether global government is good or bad a fact?
No,
it's an opinion. So, could you say that global government is neutral and your reaction to the global government is bad?
No.
Okay, so explain to me how it's bad.
Every place global government has gone, there's been a dislocation of the resources as well as there's been a mass amount of murder usually takes place as well.
Okay, so are you saying that murder wasn't happening until there was global government?
No, that's not what I'm saying.
Okay.
I'm speaking only of the UN.
Okay, so the UN is murdering people all over the world.
Yeah.
Okay, is the UN the only ones murdering people?
No.
Okay. So, and again, is the fact that the UN is murdering people, what is your take on why they are murdering, or who are they murdering? Give me an example of who the UN is murdering.
Their first event was in the Congo.
And who was actually doing the murdering?
They, at that point in time, they had the ability. They murdered some individuals. Then they allowed the other groups that were battling. They supplied arms to one group and took away the arms from the other group.
Okay, so if we take the people in this room, okay? Anyone in here hate anyone else in here? Okay. If I give you all guns, are we going to be dead by the end of the night? No. So if I arm the population, is it me, the one arming them, that's doing the murdering? Or is it the population that chooses to take the guns and murder themselves?
If you pick an existing population that have animosities against each other,
then there's already that's already instinctual in them. They're already murdering each other.
correct.
They're already out to kill each other.
Don't supply arms to both, or supply arms to both.
It's just commerce. And in reality, if there was no demand for the weapons, would they be doing anything for the weapons? I mean, if the people themselves didn't want those weapons to kill each other, how would we have any control over them at all? Why would they even want the weapons? Why would they just say, yeah, no thanks, we don't need any guns?
That's an absurd
Everyone in the conflict wanted the weapons.
Everyone in the conflict wanted the weapons.
But the fact is the conflict already existed before the weapons were there.
Yes, it was there before.
Okay.
The UN merely supplied and favored one group over another.
So could we just look at it, is it possible that all the UN did was speed up the process?
No.
I mean, if they're already at each other's throats, they're already in contention, they're already fighting, if we just give them arms, doesn't it just kind of speed up the process? I mean, they kill each other a lot faster if they have automatic guns rather than slingshots and spears and bows and arrows.
It does speed it up, but at the same time, you pick one group over the other.
Okay, and again,
And you change the dynamics. You're playing as in the international. You're playing the banker again.
okay,
The banker supplies one arms and detracts from the other side,
and
to improve his own commerce.
here, pass that back.
I don't need it. I would just like to get back on point.
There is no point. This is the point. It's about control. It's about control.
I feel like we're missing something here.
Well, I just want to add on that, if you're open to having a conversation, that's actually a practice in being a creditor or a debtor. So I think what Brandon's doing, if you look at the way he's following up in the questions, it's coming through to how do we resolve this as a creditor. So everything that you can be discussing, any topic, can fall into what we're learning.
Exactly. And this one's as good as any because we look at ourselves as a global community now. If we're truly going to step up and be creditors, we have to take these kinds of situations head on, right? So here's a neutral event. People are killing each other. Is it unique to any place on the planet? No. In fact, I challenge you to name a place where it's not happening.
Iceland.
I'll bet you there's murderers in Iceland. Maybe not a lot. But whenever you have contention in human beings with weapons, they'll find a reason. Now, if we take responsibility for the people in the Congo killing each other, and we see it as it's the bankers, okay? Like the example he just gave was they're going in and they're picking one side over another, okay? Have any of us stepped up to be the creditors for the Congo? No. And in fact, is it possible for us to step in there and head and lead these groups in a different direction rather than feeding the idea that they should be killing each other? So there is a possibility of bringing that conflict to an end, but only if we walk into the situation as creditors and we educate the population on being creditors. Because the fact remains that if no one's a creditor in the Congo, do you see an end to the conflict anytime soon? Can you pass the microphone back?
I was just going to add that isn't it one possible other way to look at it is if the UN is providing arms or, like the international is providing arms to one side, isn't that one possible creditor remedy?
What do you mean?
I mean, couldn't they be couldn't that be considered a remedy? Give one side arms, have it end faster. I mean, it could be.
I mean, again, she's just taking the position that they're already killing each other. Let's speed it up. Let's just give them bigger guns, right? I guess that could be looked at. Now, maybe if I was approaching it strictly as a financial or physical creditor, if I was approaching this as a spiritual creditor, yeah, I probably wouldn't want to be giving arms to anyone, right? But we need to find some kind of level ground, somewhere for these groups to work out their differences.
But one possible way might be, okay, if you give one side arms and they kill each other spiritually, there's a chance that they could be like, oh my God, we're killing each other. Why don't we find a different way? I mean, that may be one step in the path to them seeing what they're doing to each other spiritually.
I think another way of looking at it is typically what are people fighting over? Resources. So if you walked in and offered a plan where all the resources could benefit all the people, and at the same time give them, the people, what they need. And I'm not saying that you're taking over. I'm not saying that you're going to be controlling them from the outside. It's a leadership position. I'm coming in as a leader to assist you in bringing settlement and closure to this account, right? That's what a creditor does. So if we consider warfare an account, and the two sides of the account, the creditor and the debtor, are at warfare with each other, as a creditor, I can step in and settle and close the account. Okay? So I wanted to make a point that this idea of being a creditor is a lot bigger than getting your tax returns. Okay? It's a lot bigger than that. And I'm just kind of trying to open up the scope of what's actually going on in the world and where we, as creditors, can step into what's missing and bring the remedies. I mean, they're fighting over resources, but why are they fighting over resources? What is it that they're afraid of? Are they afraid of not having land? Are they afraid of not having food? What fear is driving the warfare? Because when you teach them to take responsibility, when you're in responsibility and you're coming from a creditor's position, there's no fear. Because you're always coming from the question, you're not making up anything about the past. So whatever happened yesterday doesn't matter. So yeah, we were shooting and killing each other yesterday. What's possible in this moment, in the now? What do you want? What do we need? Where can we go from here? I mean, in reality, it's as simple as getting people to communicate. I know that sounds cliche. Okay, so we got debtors and creditors. Are there any, I know there's some more new people here tonight. Is there anyone here, because we're coming to the end of talking about the banking and everything. We're kind of going to be, in the next couple classes, we're going to be moving into what I call the next level, where we're going to be learning how to operate from the asset sides of the account as full-time creditors. And at the same time, we'll also go over some admiralty and the use of language, the proper use of language and stuff like that. So is there anything that anyone on the phone or in the room has been exposed to as far as maybe the downloads of our audio sessions, the videos, anything that you're unclear of on banking, money, finance, any of that? Acquisitions, abandonments, is everyone clear on everything that we've covered up until now? Don't just shake your head. Grab a microphone and say something.
I don't know that it's any one specific thing. You know, I have questions constantly about procedure, about how to explain this, really.
Okay, well, that's the procedure is secondary. If you understand what underlies the procedure just falls into place. Okay. So which procedures are you having trouble understanding?
I think conceptually I'm okay. I think I get it.
Okay.
Now, you know, I was talking to a friend of mine, for example, today who's a CPA, and I was trying to explain the 1099A process and the OID process. And he had a lot of questions that I couldn't answer.
Were you explaining it from the banking side? Did you draw up a bunch of ledgers and show?
Oh
them
yeah. And I gave him a brief history of bankruptcy and that whole background, and he seemed to kind of get it, but I just wasn't capable of answering all his questions at that point. So that's...
What questions? Any that you can think of offhand?
Well, like if you were to file on a credit card, file a 1099-A on a credit card, that would be an acquisition, correct?
Well, it depends on what you're doing. You could do an acquisition on a credit card.
Okay.
You could do an abandonment on everything that you charged for the year and get a return of those funds.
Okay, I was thinking on the available credit would be an acquisition, correct?
If you do an acquisition, typically an acquisition, what you would use it for is for closing out an account.
Oh, okay.
Let me show you because I don't even think I did a detailed ledger for you guys on acquisition. I think I just said zip and crossed it out. So I'll give you a better demonstration of what happens in case of an acquisition.
Brendan, would it be okay if you used an example of acquisition, let's say like on a car loan or something like that, to make it easier?
Yeah, we can do a car loan.
Thank you.
Okay. So let's do a car loan first. And we'll say that car loan was for $50,000, right? Okay, so you signed a promissory note for $50,000 on that car. That promissory note, along with the application, creates this $50,000 asset, corresponding $50,000 in interest or liability in a deposit account. Okay? Now let's say this is the dealership over here. That's the car dealer's ledger. Okay, so $50,000 has been deposited via your signing of a promissory note. Okay? This is the bank that's lending you the money. Okay? Now, you deposit the promissory note. Is the dealership paid at that point? No. This bank that's loaning you the money has to issue an instrument to the dealership to pay off the car. Okay? So remember, remember the example of the checking account. I deposited $50,000 into the checking account, right? When I endorsed a check, and that created $50,000 in interest on the liability side. The same thing. It's just like I endorsed a check by signing that promissory note. Okay? So now the bank is going to issue my interest in the form of an instrument as a payment to the dealership. And just like on your checking account, it's as if now you're writing a check. So you wrote a promissory note, deposit instrument, or demand deposit instrument. Now you're writing a check. It's like endorsing a $1,000 check, depositing in your bank account, and then turning around and writing a $1,000 check off of your deposit and giving it to someone else. Okay? So when they issue this $50,000 that goes to the dealership, they're withholding $50,000 in interest from this account, and there's a new asset, the instrument that was issued on your credit under your authorization to pay the dealer. So the dealer got his $50,000 over here. Okay? So now this $50,000 in interest from this account, just like when you write a check, they withhold the interest. So now the deposits in this account are zero. So guess where your payments go when you're paying the bank on your car loan? Right here, to bring it back up to equal this side. Okay? Because this account can't be closed when it's uneven. Okay? So now, if I do an acquisition, what I'm doing is I'm acquiring the withheld interest on this instrument that paid the dealership. And by acquiring that interest, I'm now offsetting this balance. I'm bringing it from out of escrow back into the account. I now have a $50,000 credit. And that would close the account. If you have 50 on this side, 50 on that side, it's done. It's closed. If I've made $5,000 in payments before I did my acquisition, now I have a $5,000 credit on this account. Does that clarify acquisition a little bit?
So
Go ahead.
would you still have to do something then to close that account if you put a $5,000 credit?
If I had made payments up to $5,000,
Right.
and then I acquired the $50,000 and there's a $5,000 credit,
Yeah.
I should get a check in the mail from the bank for $5,000.
So it would still, but it would still close out the account. You wouldn't.
Yeah.
not-
No, it would still close out the account, and they'll probably issue a check. They may not issue the check. That's probably not your concern at that point if you're just doing an acquisition on it. But by law, they should issue you a check because that's a credit.
So procedural-wise, if we do a 1099-A and we check acquisition and it gets sent to the bank, will this happen automatically, or usually do you have to do some sort of a follow-up to ensure that it happens?
If it doesn't happen you mean you've sent copy B, the recipient's copy or the borrower's copy of the 1099-A to the bank, and they have not zeroed the account.
Right, so let's say that.
Yes, there are procedures you can take to follow up that procedure. There's 1,000 different ways to approach it. Something you may want to think about is maybe putting together some kind of a presentment in the form of a letter instructing them, hey, I'm sending you this 1099-A, send them another one, a copy, and a 1099-INT for maybe the interest that you've paid in on that, and then a clear set of instructions saying, this is what's going on. I've now acquired the interest or the asset in the interest that was issued to the car dealership, thereby closing this account. If I don't receive your acknowledgement of a closed account within 30 days or 60 days, however you want to time it, then I'll be contacting IRS and filing a suspicious activity report. And then you could follow up with 3949A, which is suspicious activity report with IRS. Microphone to the back.
So now, once you've acquired the interest in that escrow account, what happens to that other $50K?
Once I've acquired this interest, what happens to which $50K?
On the left side of,
on this?
Of the escrow ledger.
Really, this is an acquisition. See, the interest, you can only ever, remember, in public, the only thing we can ever trade around and get returned is the interest. Right? Because the assets are private. Okay? So when you acquire this interest, the asset may still be sitting there, but that's an escrow. We don't have to be concerned about closing that account necessarily, because chances are this asset got stapled to about 10,000 assets just like it and is being traded on the open market. Okay? But the interest, you still have the interest in that asset, because when the instrument was issued, it was issued on your credit. So that you have interest in that instrument. When you acquire it, it's going to offset what's due in this account. Yeah, and it's the same thing for a house loan. The amounts would just be maybe a little more. Maybe 500,000, 500,000, 500,000, 500,000. And it's the same thing. The payment goes to pay off the seller. And it's the payment that goes to pay off the seller. Because when you deposit the initial instrument, that interest is then withheld with another instrument, which is the payment instrument that goes to the seller. Okay? So that's what you're acquiring, is the interest in the asset that went to pay the seller on a loan. Clear? Sweet. Microphone? Did you have one?
I just wondered, after you do an acquisition, what kind of time, is it like an acquisition where you follow up with a money order? How long would you wait?
An acquisition.
When you do it, or do I not understand that?
Okay, you're following up an acquisition with a money order? If you're doing an acquisition, no need for a money order.
Because it just balances it all out.
Yeah. I mean, unless there's still an outstanding balance.
No, yeah, it wouldn't be.
Okay. So that it's almost like, okay, this method didn't work. Let me try throwing this one at you. You know, maybe finish enforcement on your first method. You know, before you start having 2 or 3 different things open where you're trying to achieve really the same thing. You know, you're either going to pay it with the money order, which again I don't recommend unless you've already set yourself up, because and we'll get into this in the last 2 classes, session 11, session 12. We'll talk about how really, if you're going to be using money orders, you're going to be using them through the DTC. DTC is going to be wiring the funds to an asset account, which you can write checks off of, because a check, everyone knows what a check is, and everyone's used to getting a check, but not many people are going to take a money order from John and just go, oh, a John money order. You know, they're going to look at you kind of funny and go, right, okay. Because again, they don't have you don't have a special agreement with the banks to accept that as money and to monetize it. Whereas, remember, the state of California, in the issuance of their IOUs, had to set up a special agreement with the banks to accept these IOUs and to monetize them. So, if you haven't worked out a special deal with the banks to monetize your money orders, special John money orders, then whoever you're paying with the money order isn't going to be able to monetize it. They're not going to be able to settle the account the way they want to, which is getting liability funds.
Okay. Well, 2 or 3 weeks ago, on one of the calls, Tuesday night calls, somebody had taken like an IRS bill, and they, to my understanding, made it in a money order and then sent it in. That's where I'm confused, is like how that was used.
Oh. Yeah, and that's making a money order out of the payment coupon, which is realistically, for all of you out there listening to this, that is the best method of using a money order. Okay? I really don't recommend using those private money orders that you've seen that I've given you examples of. Don't ever use those unless you're going to be using it to the DTC with the offer and everything else and getting the funds transferred and then writing a check for it. Okay? If you get, let's say, is Clark here? No? Okay. All right, let's say you get a $5,000 frivolous filing penalty from IRS. Okay? So some people are raising their hand. I got one of those. Okay. So you're going to get a... Oh, perfect. Let me see that real quick.
Sounds familiar? No, it's not mine. Oh.
Okay. So it's going to look something like this. It's going to say, okay, cut here, dotted line across the top.
Could this be also used for credit cards?
Anything that sends a payment coupon you can do this with, but the only ones that I'm knowledgeable of accepting it are the IRS. Okay, so don't count on your credit card company doing anything with it but throwing it away. Okay. All right. So on here we've got internal revenue. PO box.
I have a quick question while you're writing, Brandon. This is a perfect segue. I asked the IRS for a bill today from my past taxes for 2003 and 4.
Uh-huh.
And I opened it up today, and it's blank. So I just wanted you to take a look at it.
They mailed you a blank piece of paper?
No, it's a blank bill. It's really weird.
Like it doesn't even have zeros?
Nothing.
I would call them. I think you made a mistake. So, I think you were sending me a bill, but instead you sent me a blank piece of paper.
There's a separate piece of paper that has the total amount due on it, but it's not on that. Isn't that weird?
Yeah, but this isn't all they sent, you're saying.
No, there's a separate thing. There's no cut line. It just has a printout of what's.
So there's no payment coupon on it?
No.
Okay.
That looks like a payment coupon right there. It just doesn't have a number on it. Got the blank, the amount, and all that stuff. Over there trying to
So what if there was a date on there by a certain date, and would that mean you have to have it in before that date?
Yes.
And then, so if you send that same coupon, or if you turn it into.
Then you might get, if you send it after the date, you might get another one saying you still owe us $2, $5, $10, $50, whatever the penalties and interest might be after. Right.
But they would accept it for that number, though, that would be on there, most likely.
Yes. Okay. So this is basically what a payment coupon looks like when you get it from the IRS. Now, your address information will be here under your name. The rest of the IRS's information will be here. It should fit nicely in that payment envelope they send you. You could actually detach it, put it in there, and this Internal Revenue address will show up perfectly in the little window. Don't detach it. Okay? Listen carefully. Now, this is not good because I'm already used a red pen. Okay. Now, typically, all this information is in black. Okay? So this is going to kind of be backwards of how we would actually do it, because some of the text we're going to put on here would be in red. But so that you can distinguish between here's what it is before and what it is after, I'm going to put in the additions to this form in black. Okay? So up here, upper right-hand side above the Internal Revenue Service, first, when you read the directions for making a payment, it says make payable to the United States Treasury. And this payment coupon is going to have routing numbers at the bottom, just like a check, because that's what it is. Okay? So it says make payable to the United States Treasury. So I do this. I go payable to U.S. Treasury. Okay, so that's my first little addition to the form. Okay? Well, it would be in black. Well, I would only put the accepted for value statement in red. The signature would be in blue on both. Okay? But you can, all this other text that you add can be in black. Over here, I'm going to add it. It also says to put the tax year, the tax form, and the amount enclosed. So I'm going to actually write that in. Tax period. 12/31/2007. That's my most recent penalty. Tax form. Now, typically, if you get a $5,000 frivolous filing, it's associated with some form, typically a 1040. So you would just write in here, 1040. And amount enclosed, I'm going to write 5,000. Okay? It also wants you to put your taxpayer ID on there. So I would actually put right here, even though it's already in right here. It's actually that encoded information at the bottom, just like a check, actually has your number in there. But in their instructions says make sure you put your taxpayer identification number on your money order. Okay, this is our money order. So I'm going to put it right here. TIN 123-45-678-9. Okay, so now I've got all the information they request or require on the money order. On the money order. Okay, actually I also write money order up here. Money order. Okay.
And you use this as well, right?
Yes. This is actually the most successful type of money order, to tell you the truth. And it's when you hand write it.
Really?
Okay? Leave it attached to the upper part of the form and write in all this crap that I'm writing in. Okay? Down here, you're going to draw yourself a line, just like on a check, right? Where your signature goes. And underneath that, you're going to write authorized representative.
Say this is supposed to be all in black ink. You just switch pen colors, or is it as it looks?
It
there?
would be, all of what we've done so far would be in black. Okay? Because we haven't done any signatures or the acceptor for value statement yet. So this could all be in black. Okay? And the rest of the form would also be in black. But I wanted to distinguish what we had before we started. Okay? Alrighty. So I think that's about all I would add in black. Yep. Okay, so now up here in this upper right-hand corner, there's usually some space. Okay? What I'm going to put up here is my accepted for value statement. It's going to go like this. Accepted for value. In red. Actually, there's not really a lot of room on here. It's usually I write it out accepted for value, exempt from levy, all one line. Accepted for value dash exempt from levy. But on this one, I'm going to have to put it below because I really don't have enough width on this form. Okay. Then I'm going to put the date. No, I'm going to put my exemption number, what's my exemption number? Without dashes. 1, 2, 3, 4, 5, 6, 7, 8, 9. I'm going to put February 26th, 2009. I draw myself another little line right here. Put authorized representative. Again. This is all in red, though. Representative. Okay? So this whole statement right here, just this one we just added. Now, this box I'm drawing around it, do not draw a box around it. In Admiralty, what does it mean when you draw a box around something? It ain't there. It's gone. It's no longer on the document. Same with parentheses and brackets. You put anything in parentheses, brackets, or a box, and it ain't there. Keep that in mind. Okay? But just to show you, that would all be in red. Okay? And this would have my fancy Hancock on there. In blue. And then down here I would have my Hancock in blue as well. Okay?
Why blue?
Show it's original.
Instead of red or...
You could do red. I would do blue on this one. If you do red on this, you could do red on this one, but definitely do blue on this one because this is public side. Anything in red is private. Okay? Alrighty, and I would take this same statement and put it on the top half of the form. Okay? Just the same way, right at the top in the middle. Usually there's some space on the IRS form at the top in the middle. And just write it out. Again, better to write than to stamp.
But you said you could put both signatures in blue.
Yeah, you can put these signatures in blue as well as the one up on the top of the form.
And the portion in the
But The accepted for value statement at the top would also be in red. Okay? Yeah. Okay? That's a money order. And these are the money orders that we're having the most success with, are the handwritten on top of their already the money order they sent you, because it's got the routing information already encoded on there. That's why we're having success with these. Whereas if you make your own money order, you're not going to have this fancy little encoding down at the bottom, which is going to enable you to get it processed. Probably. I didn't even think about that, but it probably is magnetic ink. And if you could see here, here's a sample of a form that Justin did. I'm not going to pass it around or anything because it's got his personal information on it, but you can see right here at the bottom an encoded line. And that encoded line has his identification number, his name, and some routing information, including the amount, which any of you, who was it? Was it you brought me the checks? Didn't you bring some checks before? Okay. Okay. When you get like a copy of a check or a legal copy of a check from your bank, it'll have an added line, like you know how it has its regular encoded line, and then they add another encoded line? Right. What's the difference between the two numbers? The amount of the check is encoded as well. And they're already expecting $5,000 from you. So guess what? 5,000 is already encoded down here in the number. Yeah. Okay.
Almost make that piece of paper worth 5,000 as a result.
It is worth 5,000 as a result. As soon as you put the signature on it, that's a $5,000 check or money order.
What do you mail it to?
You just put it in the payment envelope. No, they don't. They don't. But so yeah, just put it in the payment envelope. Send it. You could send it certified. Doesn't have to be registered. Okay. That is probably the best method of using a money order, and really the only one I would ever recommend using is outside of the DTC. Okay.
Get them to send you a bill, then would you do an acquisition in 1090? Would you recommend like a 1099A?
On the IRS or on Franchise Tax Board?
State.
State, I would do a 1099A. Because state isn't necessarily going to take this either, because the state is just like any other corporation. Correct. They don't operate like the IRS does. So if it's Franchise Tax Board, I would probably just do an acquisition.
So, Brandon, I have a question that's a little off the subject of this. Before, when you were drawing in the ledgers, you have the asset on the left, and you have what's called the interest or the liability on the right.
Right.
When you use the word interest, you're not really meaning the way interest is used in our society.
No, not usury. I'm not talking about usury. I'm not talking about a tax on interest. See, typically what happens, like let's say in a savings account, so you deposit $100 into a savings account, right, and interest accrues, so you get like a whole 3 cents a year or something on that, something extreme. So I make a plus 0.03 in usury, and that usury is being paid to me because, why? I authorize them to use my $100, and they're paying me a tax on my interest because I have an interest. That's my interest. That $100 is my interest. They're using it, so they're paying a tax on it. Usury. They're using it, so they're paying usury. That's when I talk about interest, I'm usually talking about the actual interest, which in public, everything's interest. You're only ever trading interest, okay? Because we can't trade assets. We can't use gold for money. We can't use silver for money. We can't use assets in public because we're bankrupt.
Would another word that would be similar to interest would be like your entitlement to that?
Or would it be vested interest?
It's exactly what it sounds like. I have an interest. I'm interested. It's interest. It's like every other way of using the word you can possibly think of is what it means, except for this tax. Yeah, and this is what you're used to thinking of it as, is this tax. And that's not what it is. Everything's interest in public, and we're always trading interest. And that's why we have the UCC. Because we no longer have money or real money or gold or silver or any kind of commodity. We're not trading legal title anymore. So all you're ever exchanging is interest. So if I give you this pen for that cup, I now have an interest in the cup by the exchange of the pen. Actually, that's not a good example because we've actually exchanged legal title of the items. It'd be better if I took Federal Reserve notes. If I give you 10 Federal Reserve notes for the pen, now I have an interest in the pen. But did I give you anything of value? What did I give you? Debt. I gave you a promise to pay. Is a promise to pay the same as payment? Not in jurisdiction A, but in jurisdiction B in Disneyland, it is payment. It's money. So we pass around debt and we look at it as money. But all we're ever exchanging is interest. Because we're not using this real money, we're not taking legal title of anything. We're only ever taking equitable title, which is an interest in something.
There's just a great quick line in the International. One of the bankers says, fiction has to make sense.
Fiction has to make sense. That's an interesting line. Because my experience is that it doesn't make a whole lot of sense.
Whereas the truth does.
As opposed to.
How does this translate to international? Just thinking that we're in bankruptcy.
Mm-hmm.
How about other countries that are not in bankruptcy accepting our debt money?
Which country is not in bankruptcy?
Well, I guess that's my question.
Russia's deep in bankruptcy.
So the world is in bankruptcy, basically?
Yeah.
What about in England?
Oh, yeah.
So
maybe not the city of London, which is only a mile square inside of Greater London.
Yeah.
That might be the only non-bankrupt entity over in the UK, is the city of London.
So are you saying that's the only area on the planet that's not in bankruptcy?
No, Vatican. Yeah, I wonder why. Vatican's not bankrupt.
Wow.
China's bankrupt. If they're operating, all right.
And this has been, how has that been for as long as the United States have been bankrupt as well, or has this happened throughout?
Well, the United States has been bankrupt since 1789.
Right.
So all the nations pretty much followed suit in about 1933. Almost all the nations.
So this was just.
So we're going to change the tape real quick, and then we'll continue. What's that? Russia, they may have paid off their. All right. I'm sorry, go ahead.
A friend of mine, she's from Saudi, and she was explaining to me that they give loans without any tax, any interest. So they just really just pay back what they loan from the bank.
Right.
So I'm not sure, she was saying that it was backed by gold still, their currency.
Oh, really?
That's what she said, yeah. So
if their currency is backed by gold, then they may not be bankrupt. If it's a fiat currency, chances are they are bankrupt. I don't know about the money systems in the Middle East. I'd have to do some research on them. But
so how would that? I mean, if we wanted to buy Saudi money, then we couldn't, I guess. Or how does that work?
Well, it's up to them. Are they willing to take your promise to pay for actual money?
Right.
It's up to them to really to decide.
The Europeans don't even want to take U.S. dollars anymore.
What's that?
The European countries don't even want to take U.S. dollars anymore.
I don't even want to take U.S. dollars anymore. All right. Yeah.
I came in a little late, but you guys probably talked about the movie International earlier tonight. And did you guys talk about the part where the banker says it's the debt that the bankers only want to control? Did you guys talk about that?
Yeah.
Okay.
So that was what we were actually started the whole discussion about, it's about control. That bankers aren't interested in making money off their loans. They're interested in control. Controlling the collateral, controlling the property. And the way you control is by holding the debt. If you're in debt to me, I control you. That's just the way it is.
What if there is no collateral?
There's always collateral. It could be you. You could be the surety for that debt.
Actually, that's what's happening here.
Mm-hmm. And you are. In most cases, you are the surety for that debt. Mm-hmm. Your labor is the only thing that's actually that has value that's being traded, is your labor. Nothing else really has any value to it other than your labor, because even those things that we consider precious, like precious metals, crude oil, what are those things without human labor? Nothing.
So what's happening in a bankruptcy?
What happens in a bankruptcy?
Yeah. Like as far as the ledgers and how does it?
Oh, well, we showed how the ledgers are working in our bankruptcy.
I'm saying personal bankruptcy, and like I can't pay my credit cards.
If I go and I do Chapter 7?
Yeah.
Okay. Well, I don't think it doesn't really change how the money flows. It's what happens is the trustee is going to step in, and the trustee is the judge in bankruptcy court. They're called a trustee. And as a trustee, what does a trustee do? Controls the property. So all the property is turned over to the trustee. Trustee pays off all the debts. Pays off what she can.
What happens when you refinance? Does that create a new loan?
Yeah, that's a totally new loan. Okay, so let's say, remember we had our ledger here, and let's say your original loan way back in the day, it was for $200,000. And you've been paying, and now the balance is $100,000. Okay, you're trying to pay that off, and then somebody comes in, they say, hey, we'll refinance you. What they're doing is they're doing a completely new transaction where, let's say it's for $400,000. Okay. So you sign the promissory note, creates an asset for $400,000. You have a $400,000 interest in that. They're going to issue a payment instrument to these guys for $100K. So $100,000 is withheld on that first instrument, and it goes to pay off the first bank. And then they give you a payment for $300,000. And you go and you buy new cars and a couple new houses, and then you got a big hole right here. Because that $300,000 did the same thing that the $100,000 did. It got withheld, but issued to you as a check.
Can we claim that? Can we go after abandonment of
Of
the
the $100,000?
Yeah.
Yeah.
Within 3 years?
Yeah.
So can you go for after both or no? Sure. Is that a critter?
You always got to look at it as it's a zero-sum game. Okay? What happened to the interest here? It was withheld from here, but where did it end up? In your pocket. Right? And then you went and deposited into an account, and then you went and bought cars and all those other things with it. But you actually retained the interest. The interest wasn't withheld from you. This $100,000 was withheld from you because it was paid off to Bank A. Okay? So you always got to look at it as a zero-sum game. Everything comes to zero at the end of the day.
So in essence, you can do an abandonment on the $100,000 within 36 months.
Yep.
And do an acquisition on $300,000.
Yep. Exactamoon. Actually, you would do the acquisition on a $400K.
Okay.
Because there's the 100 and the 300. So there's 400 if you're doing an acquisition. If you're doing an abandonment, you could do it on this, and all payments, but that would be off of your checking account, so that would be a different ledger altogether.
I had a question going back to the personal bankruptcy, if everybody's done about talking about this.
Okay.
So in a personal bankruptcy, you said the judge becomes a trustee. Can you reverse that trust?
Can you reverse the trust? You want to be the trustee?
Yeah, if I wanted to repay the debt in a personal bankruptcy.
So basically, you want to subrogate the rights of the trustee in bankruptcy and act as trustee. Trustee isn't always cut out to be what you want. Okay, there's other positions you can be in, especially in a court. Okay, because in court, every court case is a trust. Okay. How many of you are familiar with trusts?
Which kind?
They're all any kind. Okay, who makes a claim in a trust? Beneficiary. So, what is the plaintiff? The beneficiary. Who's the trustee? Who's he making the claim against? The defendant. So is it always good to be the trustee? Not always, right? You don't always want to be the defendant, do you? No. So in the case of bankruptcy, who are the beneficiaries? Creditors? Who's the trustee? The trustee. And who's the grantor? You are. Okay, so in the case of a court case, you may want to look at it as you want really the ultimate position to be in a court case situation is the beneficiary. Because you're going in and you're making claims against the trustee, and the trustee is going to have to fulfill his duties to make sure you get what you're after. So if I have a claim and I have something due to me as a beneficiary and I make a claim, it's the trustee's job to get me paid. And remember when we were talking about the private trust and the public trust, and in the public trust, who were the trustees? All the public officials, judges, attorneys, any and all government agents and agencies. So if you're coming in as the beneficiary, when you come in with the claim, you're the beneficiary, and you're making a claim on some trustee to pay you or to compel his performance. And in nowhere in common law can you compel performance. It's only in equity. Remember, we're under admiralty, which is equity law. So the only time that's one of the proof. If you're looking for proof that we're operating in admiralty, look at the courts. And the fact that the courts are constantly compelling the performance of the trustees shows that we're in equity, in admiralty.
So she would almost have to have a claim against her own estate, against her own bankruptcy.
Yeah, she'd have to go in as creditor, be a beneficiary.
So she'd have to figure out a way to have an interest in something else and make a claim against the trustee.
Mm-hmm. Or she could have a friendly creditor, someone who she knows, who they have a creditor-debtor relationship. Because basically, the beneficiary can challenge all the other beneficiaries. See, if three of us walk in there as creditors into a bankruptcy hearing, and the debtor's standing over there, and we're all three trying to make a claim on her house, it's going to be, okay, produce the claim. And who can produce the best claim? Right, the highest form of the claim. And what's funny is that in public, we've all seen in public it's all about form, there is no substance. So if I go in there as a knowledgeable creditor with an actual claim backed up by something in evidence and a UCC1 in the public records, I've got the paramount security interest, I've got the superior claim. So I can challenge those other creditors to, hey, show me your claim. they're going to pull out an invoice like, they ain't a claim. Sign it under penalty of perjury. Just that. Just sign the invoice under penalty of perjury. That's all I want. At least make it a verified claim. Don't come to me with a piece of paper with some numbers written on it. Here's my claim. Go grab a piece of paper, write $1 billion on it. Here's my claim, Your Honor. Because that's what he's doing. Anyone who walks in with an invoice is basically printing some numbers on a page and walking in and saying, I've got a claim. And if nobody challenges that, that's the claim. Okay? So keep that in mind. That's all that's going on in the public. It's all about form. There is no substance behind their claim. Okay, let's see. We're coming up on, we got about 10 more minutes before we take a break. Any other, where's the microphones at?
Regarding like a credit card that I closed, let's see here, a year and a half ago, they I missed one payment and then they jacked it from like 15% to 27%, so I paid it off that week. So now that account, it's probably still out there, right?
Mm-hmm.
So I could go and 1099A that account?
Yeah, you can do an acquisition.
Do an acquisition on it?
It's an old credit card?
Yeah.
And it got paid off?
I paid it off.
But you never closed it.
I never closed
so to
it.
speak. And they never really close unless you do the acquisition.
Right.
Okay, so yeah, you can do an acquisition on that. And the amount would be the credit limit.
Right.
The date would be either the date the credit limit was established, because like if your credit limit changed.
I think it did, yeah.
Okay, so whatever the latest credit limit was, whenever it went up to $25,000.
That date of that when
the
that
date of when it transitioned to this higher credit limit.
So that would be the date they sent that letter saying, we've raised your limit to yada yada yada.
Mm-hmm.
So then I would use that date
as the date of acquisition. There's on 1099A, box number 1 is date of acquisition or knowledge of abandonment. Date of lender's acquisition or knowledge of abandonment.
So that's like so with that, what are all the options that I could do with that account? I could do the abandonment, then close it. No.
How long? When was the last time you used it?
I want to say it was like a little over a year ago. I think it was like November, December of 2007.
Okay, so you used it in the year of 2007, you used it in the year of 2006,
yep.
And you used it in the year of 2005.
Yep.
So you could claim back all the funds that you used on that card. So every time you charge the card,
mm-hmm.
all of the charges for 2005, all of the charges for 2006, and all of the charges for 2007, you can get back.
Got it. So then I would just leave the account. Then I would just go after the funds that I.
That would be doing an abandonment on each of those. You'd do an abandonment for everything in 2005, an
mm-hmm.
abandonment for everything in 2006, an abandonment for everything in 2007. The dates you would use would be the last statement date for 2005, the last statement date for 2006, and the last statement date for 2007.
Okay. I think I got it.
He could, but if you're going to do an abandonment, I would do the abandonment first. Because you do an acquisition and zip that account away, I don't know if you're necessarily going to get the return of the funds.
Brandon, if you don't know or can't find out the date that the credit limit was established, can you just do the date that you're choosing to do the acquisition? Would that be sufficient?
Read the instructions. I'm sure, because it says date of lender's acquisition or
right.
knowledge of abandonment.
Okay, because I've just been putting the date that I'm actually acquiring the asset, not when the credit limit was established.
Okay.
Make sense? Would it work?
Yeah, you have to keep in mind that whatever date you put in there has to meet up with a ledger somewhere. Yeah, because that's how they're going to match it up with their books. They're going to go back to their books and go, okay, around this date and time we had some kind of issuance of some kind of credit or instrument or something. There's an asset, and somebody's acquiring it. So they have to be able to find it in their books. And if you got a statement on that date, then there's something in the books for that date.
You would think they'd be able to find it just through the account number, though, right? I mean, just pull up the account. Here's when it was open.
You would think.
Yeah.
But again, you need to associate it with a date. Because remember, if we're doing like abandonment on a credit card, if you just pick 08, and you're claiming everything you did in 05, how are those going to match up? When they go to your 08 date, they're going to be like, where did he get these numbers?
Right.
This doesn't match up with anything in 08. You see?
Yeah. Okay, thanks.
Those for an acquisition or an abandonment you just described?
Abandonment.
Those for an abandonment.
Yeah.
But just to clarify on that note, as far as if they're looking at the date and the ledgering and the amounts, if you do have let's say even a bank account or the credit card, and you have different amounts per month, then how there would be a discrepancy in the number that they have for that monthly statement as opposed to the whole year.
Right.
So how do you reconcile?
If we're doing, are we talking checking account or credit card?
Checking account.
Okay. On a checking account, I'm using the last statement date in December on my checking account, which to me, remember, it's the date of lender's acquisition or knowledge of abandonment. On that date, I know that all of the funds for that year totaled up to, all of the interest withheld totaled up to a certain amount as of that date, because that's the last statement date. So I know everything for December. I know everything for November, October, September, all the way back.
Well, it makes sense. I will understand that when I file the 1099A, but how will they understand it on their records? Because they'll look at that date, let's say the last statement, December of 08, and they'll see the amount for that month only.
Right.
So how will they know that it means the whole year?
Because it's a tax reporting for the year of 08.
On car loans acquisition, what date do you use for that?
Acquisition on a car loan would be, the date you sign.
The date you sign. And how important is it to get the date right on those things?
Pretty important. You want to be within, basically it happens within 72 hours of the application. If you don't have the exact date, you might want to do the last day of the month month that it happened in. So if you know it was in September of 07, but you don't remember what day, I'd put like September 30th, 2007.
The question here is about a person's personal money that's in their own account, personal checking account. Say they write a check and they deposit it at a to another LLC corporation that they control or that they are guarantor on. Can you claim those funds? Can that person that sent the check, can they do a 1099A on that?
You can do an A on that. But what is that leading to?
Yeah, is it above board? Is it,
No, you could do an A on it. But are you thinking of following that up with a no ID and reporting it as withheld?
Yeah.
Let me ask you this, was it withheld?
Well, it's the control, I guess.
It was withheld from one account, but like I said, it's a zero-sum game. At the end of the day, you just shifted it from one pocket to the other.
Okay.
I took it out of this pocket and I put it over here in this pocket. I'm still even. I still haven't had my interest withheld. And I'm not saying you can't do it that way, because you probably have no problem doing it that way. I'm just saying we're playing a zero-sum game. And if we're conscious of all the accounts we're using and we're paying attention to where the sum goes up, where the sum goes down, where it's withheld, where it's not withheld, at the end of the year, at the end of the accounting, at the end of my life, everything should balance to zero.
And you're saying by those who do go after that and do it to 1099A, they're not, at the end of our lives, we're not being good creditors.
I'm not saying that. I'm not taking a position on it one way or the other.
But it's not a frivolous filing.
It might be.
Because maybe I was asleep or I wasn't paying attention, but when it goes from the person to a corporation, that was just my question. But it is a corporation that the person controls. So
yeah, and again, that's all I'm saying is Because if you're also going to be claiming all the funds out of that corporation's account back on your 1040 as being withholding, everything that you spent out of that account, you see where you start to run into a problem. You start to not have a zero balance at the end of the day.
Right. Okay. Thank you. Well, I know person to person, same person, but it was a corporation that was a question. But thank you.
I'm relatively new at this first time I've been to one of your sessions, and my wife heard you this last Tuesday, and was quite excited about, Judy.
Oh, Judy.
Yeah. The question I have, because the 1099A has just been introduced to me, and I'm really unclear in my mind as to what the 1099A itself is, I would involve myself with, and what 1099 OIDs do. I don't understand the distinction as to what the benefits of each are.
Okay.
I guess is the best way I could put it.
Okay, and actually you would use them in conjunction here. We'll do, actually, because I know there's a lot of new people here who probably didn't have the benefit of our money and original issue discussion. So I'm going to just give you the quick and dirty on it. Okay. I endorse a check for $1,000, and I deposit that endorsed check into my checking account. It's an asset, and I have $1,000 in interest in that asset. Okay? If I write a check, now that we'll call this, this is Bank A, and I'm going to write a check to Bob, who has an account over at Bank B. I'm going to write a check to Bob for $500. Okay? When I write a check for $500 and give it to Bob, he endorses it and deposits it into his account, which gives him a $500 asset here and $500 in interest in that asset. Okay? Whenever I refer to the interest, the right-hand side of the ledger, that is your balance. This is the public side of the account. Okay? You notice whenever we reduce this side, it doesn't change this side. Okay? The interest is the public side of the account. The asset side of the account is the private side of the account. You don't have access to that on any statements. When we start working with the DTC, you'll start using that side of the account as the account you make your payments from. But until then, we're operating from this side of the ledger, the liability side. And I always refer to it as interest, because you can't have interest in public unless there's an asset first. And remember, we create all the money. So every time you endorse a check, every time you write a check, you're creating money. And whatever the face value on that instrument is your interest in the asset. So if I write a check for $500, I've created $500, and I have a $500 interest in that instrument. Okay? So I wrote Bob a check for $500. He endorsed and deposited it. Okay? Federal Reserve contacts my bank and says, hey, you need to reduce your deposits. This goes back to modern money mechanics. It doesn't say send us the money. It doesn't say send the money to Bank B. It says reduce your deposits. They go, okay, we're going to reduce it from this guy's account since he's the Yahoo who wrote the check. Okay? So negative 500 here. And they withhold that 500 because they must reduce their deposits, and they put it into escrow. Remember, can they loan from their escrow money? No. That's how they reduce their deposits. That is a withholding of your interest. Okay? You created a $500 asset when you wrote the check to Bob. The asset ends up back at your bank in an escrow account. Your bank reduces your interest by the equal value to the asset. Why do they do that? To keep the debtors from writing trillion-dollar checks. If they didn't reduce your interest equal to the amount of the check, you guys would be writing ridiculous checks. Right? Yeah, as debtors, we'd be like, oh, I'm going to go buy 100 mansions, and I'm going to pay $250 billion for it. Okay? To keep everyone in check, we have to remove or withhold their interest in every instrument that they create. Okay? So your interest is withheld and put up here into escrow. All righty? Now, there's a 3-step process to getting a return of your interest. Step 1, here, actually, everyone got the ledger? Everyone understands what happens when I write a check, right? Money gets withheld, right? Into an escrow. Okay? So I'm going to erase this real quick, and we're going to do our step 1, 2, 3. Okay. So,
Brandon, I have a quick question.
Yes.
You had mentioned 2 books that really explain how
Modern Money Mechanics, Affidavit by Walker F. Todd, and he was a special counsel for the Federal Reserve. Modern Money Mechanics is a publication put out by the Chicago Federal Reserve. Affidavit by Walker F. Todd is an affidavit that Walker Todd, who was a special counsel for the Federal Reserve, he actually wrote an affidavit as testimony into a court case because there was a court case going on where the defendants or the plaintiffs, I don't know who they were in this case, but they were arguing that you never loaned us any money. And Walker Todd came in and said, they're right, you never loaned them any money because this is the way it works. Okay? So those are 2 very important documents to understanding the flow of funds when your interest gets withheld and everything.
And on the website, does it tell you where you can buy those publications?
They're for free. You can get them all. I mean, if you do a Google search, you'll find 100 different copies to download, all PDFs. Affidavit of Walker F. Todd. Yeah, it's on our site. It's on the private network site where we have all the documents and everything available.
Cool.
Class 2, Session 2 documents. Okay, so now we want.
I get it now because I'm up and my granddaughter is here and I'm going to have to take her to school in the morning.
Okay. So we want a return of our interest. Step 1. What is step 1? Anyone? I didn't say what form. What is step 1? Identify and report the abandonment of our interest. Okay, so we have identify and report abandonment. Okay. Step 2. What is step 2 to getting a return of our interest? Report what? Report a withholding of our interest. And what is step 3? Claim a return of our interest, right? Claim a return. Isn't it nice how everything works out to be 3-step processes and 3-fold? We can make everything into 3 steps. Okay. Step 1, identify and report abandonment of the interest. What form would we use to do this? 1099-A. And would we mark box 5 yes or no? Yes. We would mark it yes because it's an abandonment. Okay, so step 1 integrates or incorporates the 1099-A as an abandonment. Okay? Step 2, report withholding of our interest. What form might we use for that? The 1099 OID. And step 3, claim a return of our interest? 1040. Okay. In step 1, in identifying and reporting the abandonment of our interest, there are 2 parties listed on a 1099-A, a lender and a borrower. Which one are you? Lender. Which one is the bank? Borrower. Step 2, we're reporting the withholding of our interest on a 1099 OID. There are 2 parties on a 1099 OID, a payer and a recipient. Which one are you? Recipient. Which one is the bank? Payer. And 1040, I think you're the only party on that one. Okay? Right, because you're reporting a withholding. Now, let's talk about a couple other boxes. The 1099-A in step 1. What goes into box 1? Box 1 is the date of lender's acquisition or knowledge of abandonment. What goes in there? Last day of the year, last date of the last statement for the year.
Or date of the loan.
Date of the loan if we're doing an acquisition. Doing an abandonment on the car loan for the entire instrument, then that would be that if you are doing an abandonment on the note and you're getting a return of the full amount of the funds, then yeah, it would be the date of the note. Okay. Box number, yeah.
If you're doing that for a bank statement, for checking account or credit, whatever it is, and the statement ends on December 15th.
That would be your date.
So what would you do with the rest of the month then?
It would be in the next. It would be in 09 year. Because it's going to appear on your January statement for 09, right? Everything that happens after the 15th. Right. That's why it's a good thing to use instead of using the last day of the year. That's why you use the date of the statement, because everything that happens after December 15th is going to end up on January's statement. Okay. If we're doing an abandonment on funds from a checking account or a credit card, on all the funds that you authorized the creation of and the withholding of that interest, you would use the date of the last statement for that year in the case of an abandonment. Okay? Alrighty. With the 1099-A, there is a box 2, which is the outstanding principal balance or principal outstanding balance, something like that. And box 4, which is fair market value. If we, in our example, spent $100,000 out of our checking account in 2008 and we're reporting for 2008, what is the amount that I would find in box 2? $100,000. How much would be in box 4? $100,000. Okay? This is the 1099-A. Okay? Box 5. Yep, box 2 and box 4. Box 5, we already discussed, would be marked yes. And box 5 says something to the effect of, is the borrower liable for repayment of the debt? Something like that. Okay? If you say yes, it's an abandonment. If you say no, it's an acquisition, straight across. That's my asset. I get that credit. Okay? Box number 6. Description of property on a 1099-A in the case of a checking account. Instruments issued on account, credit issued on account, assets issued on account, notes issued on account, whatever you want to use, it should adequately identify what it is we're claiming a return of. It's what we had interest in, okay? Because we're claiming a return of our interest, but we list the secured property on the A. Have any of you ever seen the title of a 1099-A? Acquisition or abandonment of secured property. Okay? You need a microphone back there? Yeah, he's got it. Oh, he needs one too.
Can you do one after the other? Do both?
Can you do one what?
Say you do an abandonment.
Uh-huh.
That doesn't close the account.
No.
Okay, so you do an abandonment, you take your funds back, and then do an acquisition and close the account?
Yeah, you can do that. Because you're going to be claiming two different things, right?
Mm-hmm.
The property will be different. It won't be the same property. No, it wouldn't be the same property. If you're doing an acquisition to close an account, it's whatever's holding that account open. Whereas if you're doing an abandonment, it's the interest that was withheld on that account. Yeah, checking account, I wouldn't recommend doing an acquisition on. Yeah. Okay, so we did all the boxes on 1099-A. Okay, step 2, reporting the withholding.
Quick question, just for clarification. So you can, within the 36-month rule, you can do the abandonment and get funds returned with the OID. But if it's after 3 years, you can do an acquisition still, even if it's after 3 years, it's on a bank loan or something.
Yeah, but you can't get a return.
I heard something in regards to cars that they had done something in the car, they came and picked it up. Is there anything that can happen if you do a car that you're currently driving, do this process on it? Do an abandonment or whatever, and they come and take it?
Oh, okay. You're talking about like you're making your payments, right?
Yeah.
And you decide you're going to do an acquisition on the account?
Yeah, just to know, is there something you shouldn't do if you're currently driving the car and making the payments and you want to keep it?
I would say whenever you're dealing with a car, be very knowledgeable and very ready to deal with whatever may come, because it will be an accelerated process either way. Are you in a position where you can continue to make payments on it?
Yeah.
Then continue to make payments until you get that zero balance and rough them up a little bit. Why aren't you zeroing up my account? I'm just joking. No need to rough them up on your creditor. But
that would be an acquisition. If I just do an abandonment, then that ledger would still show
yeah,
whatever
if you just do an abandonment and get a return of the funds and then pay off the loan, then everyone's happy.
And that's what you recommended anyway.
That's what
right?
I always recommend. I always recommend pay off the loans rather than do acquisitions. But if you're in a position where not a possibility, then just go ahead and do an acquisition on it. You're grabbing the asset anyways, and they're able to cash in on that asset because typically they're going to be able to cash in on both. And get ready, if we all start acting like creditors, watch how fast things will start to transform. Because your electric bill, they're actually counting on getting double the money every month because you abandon the credit that's issued on you for that account. So they get double the money. So if we all start claiming all these funds that the electric company is usually claiming, watch your electric bill double. That's what will happen. Because they're used to getting double those funds. And it's all about the bottom line. They're a publicly traded company. They have a responsibility to their stockholders. Responsibility is, hey, we got to keep a high enough revenue, make sure everyone gets high dividends. So if you guys are going to start claiming back all your assets, well, then we're going to have to double our rates.
For everybody?
Everybody. Even the debtors.
So, just 2 questions. One was back on box 6. I didn't quite get what goes on box 6. The description of the asset?
Description of property is what it's called. It's called description of property.
Description of property. So how would you describe the account? Like, what would you put if it's a
what
checking account?
what are we claiming the abandonment of?
Checking account.
No. Remember, they withheld your interest, right?
Right.
What caused them to withhold your interest? You issued credit.
Yes.
Either by the use of your debit card,
Right.
or the writing of a check.
Right.
You issued credit.
Right. So I would put down in box 6.
Credit issued on account, or assets issued on account, or instruments issued on account, or notes issued on account, checks issued on account, drafts issued on account, negotiable instruments issued on account. But they're all what? I'm not saying there's anything right or wrong to put in that box. I'm just giving you examples of what would adequately identify.
But that's what I was getting at. You didn't need to put all the different descriptions. You just put in a general description of what it is.
Yeah, something.
So it's not like, yeah.
Because again, not only does it have to make some kind of sense to you for your records, but it's got to make sense to the people receiving it. If you just put the account number in that box, they're going to be like, okay.
No, I was just making sure that it wasn't like.
Where is the property of the account? You see, there is no property. The account is not property. Right. It's not something physical. Whereas the instruments and whatever evidences the issuance of the credit, those are assets. That's property that can be abandoned or acquired. Okay, so keep that in mind. Box 6 is always identifying the property. And account doesn't cut it. Somebody raise their hand. Go ahead.
So with all the people going through the housing crisis right now, what would be the best strategy for someone who's behind their payments, losing their house before it goes into foreclosure? What's the best way to handle that?
Like someone who's in crisis type situation?
Yeah.
Acquisition. Do an acquisition on the account or an acquisition on the instruments that are holding that account open, because once you've done an acquisition of that interest, that is a credit on that account.
And that pays it off?
Yes, it's a credit. It becomes a credit.
How long?
You've now basically, you've laid claim to it. That's mine. And by you telling them that it's yours, and you reported the IRS that it's yours. So now they've got to ledger it. They've got to show an accounting. They've got to show the IRS that, yeah, we gave this guy his credit. We gave him his asset that he acquired. So that now it's up to them to manage their books properly.
They received a copy B from me.
Yeah.
How long do you think it would take, once you did an acquisition, how long do you think it would take for that to actually stop that process? I mean, would it be, because there's a 10-day period once you file for them to wait, and then would it be close to immediate after that?
Oh, not necessarily.
Yeah.
It's all dependent on the bank. You might realistically, there's private, or not private, I wouldn't want to call them private. There's smaller banks that don't necessarily have the accounting staff that maybe a bigger bank does. But that doesn't mean that the bigger bank's going to act any more honorably than the smaller bank. They may be thinking, oh, this is the latest fad. People are trying to get their payments, and they may ignore it. Right. But if you're not ready to enforce it, don't expect any results. Okay? Because now that people are doing this and getting their accounts closed this way, they'll start to throw up some walls to try to stop you from doing this. Because, again, it's not in their best interest. Because now they've given up the asset, and they're not going to be getting any more payments on it.
So they'd rather have you do an abandonment.
They'd rather have you do an well. Not really, because it's still it ends up they end up in the same position. Because if you do an abandonment, you're still getting a return of the funds and then paying them off, right? Whereas an acquisition is just doing the same thing, but you're not going around this way. It's kind of like the shortcut.
So, Brendan, let's say with the home note situation, where banks are now merging or being swallowed up by other banks, who would you actually send the 1099-A, the copy B to? The original lender, which may not be in existence anymore?
Now, be careful. Just because a bank is now owned by someone else, if it's still a bank, They've still got an EIN, and they're still doing business as Washington Mutual, as Citibank, as Chase, whoever they're doing business as, that's who you're dealing with. I don't care if Chase owns Washington Mutual. I don't care if Citibank owns Washington Mutual. I don't care who owns Washington Mutual. Washington Mutual is still a bank, and they're still doing business.
And what if, the note was sold to another company, so do you send it to the original?
You got to know that the date that it was sold, and that is a new account. That's different. If Bank A sells your note to Bank B, you've now got two accounts. Because typically there should be a new account number with it too. Right? Yeah, so you've got this account over here, and you've got this account over here. Microphones.
I have a question.
No, he's got it. Go ahead.
That throws another question on that. It's like our manufactured home that we own was originally by one bank, and now this goes back over 10 years now.
Mm-hmm.
They transferred it over to another savings and loan or whatever the group was. Afterwards, probably about 2 or 3 years later, and now it was transferred to another owner. Vanderbilt, I think, right now is the latest version of whom I pay the note to. Now I'm confused when you say they're all new notes or different notes. Are we going to do what as far as, do we do something with all three of them or just with the most current? And
what you're concerned about is the most current, okay? If you're looking to be a creditor and close all your outstanding accounts, then you'll want to know about the other ones and you'll want to take care of those. But those other ones, the other two, they're not currently something you're dealing with, right?
Right.
Okay. So first of all, creditors in training, go after the debts that are still
warm,
so to speak. Okay? Once you've dealt with all the warm ones, then go to the cold ones.
Now the note would be based on what was transferred to them at the time. That's why we're identifying it as a new note as well.
Yeah, and a new date.
Date. And whatever the amount of the balance owed at that point in time would be the amount, or would the original amount?
It would have been whatever the refinance amount was. So
okay.
If they came in with your original financing might have only been for $30,000, but your latest loan might have been for $200,000, right? I mean, if you've owned your property long enough, you could have bought the property at $90,000. Now it's valued at $500,000
because of the interest.
Right. Well, no. Just because of the value of the house. So now you're getting loans on it and buying up toys with it. Okay? So there's this new loan that's a much bigger loan than the original. The new loan pays off the old one. Okay? Unless when you get a refinance, you're getting two statements, one from the old bank and one from the new bank. But chances are the new bank paid off the old bank and now you're only getting one statement. Mm-hmm. Okay? So that's the warm one, so to speak.
Quickly, so 05, because that's 36, that's beyond 36 months ago, so that's...
No, it's not. We're still in the 08 accounting year until April 15th.
So then we wouldn't be going after, we'd be going after 05, no, we'd be going, 05, 06, 07?
Mm-hmm. And 08.
So you can go up, okay.
Yeah, because we're, right now, isn't everyone doing their 08 taxes right now? Yeah. Right. But this is still considered part of the 08 tax year, so that's why you can go back to 05, because until April 15th, there isn't the transition to the new accounting system.
Such a deal.
Yeah, it's such a deal. 120 days.
I just wanted to add something for, I guess, the benefit of the class, knowing that is it for an acquisition that the bank will only know about that acquisition when I send the copy B.
Yes.
So that's the only way that...
I don't know. Maybe the IRS will say, hey, we heard you had an asset in there. It belongs to somebody else. I don't know. I don't know if just sending it to the IRS is going to do anything, but that's why you want to send it.
As far as ensuring that the ledger is going to be cleared, that's why you do want to send out the copy B to the acquisitions.
Yep.
As far and abandonments, they're going to know about it with the OID.
Abandonments, I mean, you could send them a copy of that too. And really, you should send them a copy of that. But what will the OID, I don't know if they'll necessarily know anything on the OID unless you send them a copy of that too. It's all kind of backroom accounting. The IRS is taking money from over here, putting it over here kind of deal. So they will eventually, it'll work out in their books. Whether they're conscious of it or the IRS just does some moving of numbers, I don't know. But you can't. If you want them to take some action, definitely send in the forms.
Brandon, for clarification, could you just kind of go over on the whiteboard the acquisition part? I understand when you sign a card member agreement or a promissory note, that creates the asset on the private side. The interest is the other side of the ledger, but the asset's what's holding the account open, right? So when we do the acquisition, we're claiming the asset on the private side. And once you take that back, the other side collapses because of the double bookkeeping entry. Is that how?
When we're doing acquisition, we're doing we can't even get our hands on the asset. So really the acquisition ultimately is affecting the interest in the new asset that was created. Okay, remember, I do a demand deposit of a promissory note. That gives me $100,000 here, $100,000 there, right? Then the bank issues an instrument for $100,000 to the seller. That's a withholding of my interest. That goes up here in the escrow. But that new instrument is also a new asset. Okay? That's what you're acquiring, is what went up into that escrow account. The new asset and the new interest in that asset. And by acquiring that, identifying that is mine, that's now a credit down here on this other account, which had a hole in it for $100,000.
What about, though, with a card member agreement for a credit card?
Card member agreement.
Well, when you sign the card member agreement, that you're monetizing that instrument, which gets deposited as an asset. So if you're doing an acquisition on a credit card, can you show sort of like how the paper trail works on that? What's actually being acquired?
Yeah, let's do that after break, because people are getting antsy, I can tell. And did we adequately cover this? No, I guess we might have to go to OID after break too, huh? Yeah, we haven't adequately done step 2.
1099A, is that you can use that electronically, but not the 1099 OID?
You can do both electronically. In fact, you want to do both electronically. Realistically, you don't do your OIDs electronically, good luck. Okay? Because right now, there's basically a red flag at the IRS. You mail in a 1099 OID, goes like this: out of the envelope, into a pile, and right there into the trash. Out of the envelope, into a pile, right there into the trash. Okay, so they're not getting very far if you're mailing them in. Okay, because what they're wanting is they want you to declare under penalties of perjury that this information is correct and that you know what you're doing. That's why there's that OID fraud alert out there. Hello, wake up. Don't use it for this. Make sure you know what you're doing. And that's why basically the only way to get OIDs in right now is file them electronically and follow up the electronic filing with a declaration under penalties of perjury. What is this?
Something's being circulated around today.
Oh, is this a new one? Oh, cool. Okay. Yeah, we'll go over this one too. This is different than the one we already read, right? Oh, February 19th? Nice. Okay, so we'll go over this after the break as well.
Brandon, quick question. Regarding EIN numbers for banks, do you have any tips as far as acquiring or getting information for EINs from a lot of the banks? Because, you know, like some of them we call them directly and they actually just refuse to give that information. What methods other than what's on your own database that's on the back private side of the website that we can use, or how would you recommend we go and obtain EIN numbers from
If you
some?
can't get the EIN, leave it blank. IRS knows how to get it. I guarantee you, if anyone knows, the IRS knows. Okay? But don't write anything in there. Don't write refused. Don't write anything. Just leave the EIN box blank if you don't know it.
And then for the bank name, we just put the name and the address that's on the statement that we
At
have?
least get their proper name.
Mhm.
You know what I mean? Like Citibank, don't just put Citibank. You got to know which Citibank are we dealing with. Is it Citibank South Dakota NA? Or is it Citibank NA? Or is it Citigroup? You know what I mean? Like you got to know exactly who are we dealing with. If you at least adequately identify the bank and you got their address of their headquarters, that's all you need. IRS will find.
So then you
their
need the
EIN.
their headquarters address, not the address that's on your
Right,
statements.
and you could get that off the Secretary of State. Whatever state they're incorporated in, go to the Secretary of State of that state, get the information on that corporation, you'll get their headquarters address. Okay, or you can go to, if they're a publicly traded company, SEC Info, Edgar. Yeah, there's multiple resources for finding out who they are and where they are. Yeah, nox.com is a great EIN. There's einfinder.com. EIN Finder, I think, has a much bigger database.
Ryan sent in a whole list on the Google group yesterday. Like,
Not that big.
Okay.
254 pages.
No, that's a different one. Yeah.
So regarding the electronic filing, the forms from the IRS, you can't fill in on those, right? Don't they? Like, there's no way to type into that. So what does you have to get like a certain software that'll?
We'll go over that. All right, let's take, and away we go. Let's see. Now, do we want to finish with our three-step process here real quick? Okay. Alrighty, so step 2, reporting the withholding. And we're doing that on the 1099 OID, and we already established that the payer is the bank, the recipient is you. Can anyone tell me why it is so important to get those two right? Well, because you're either going to be reporting that you withheld it from the bank or that the bank withheld it from you. Okay? And trust me, you report that you withheld it from the bank, be ready for a... Okay. No. Here, even better than a frivolous, because I didn't actually get a frivolous on my 07s. I got a $200,000 tax bill. They're like, oh, really? You withheld all that money? Well, you owe it all to us. So, just to let you know, if you don't get that part right, payer recipient, you're going to be owing a lot more than a $5,000 frivolous filing penalty. Okay? Alrighty, so step 1, we identified and reported the abandonment through the 1099A. We went through all the necessary information there. Step 2, we report the withholding with bank as the payer, taxpayer as the recipient, same account number on both. The box 1 on the 1099 OID is the original issue discount. Can anyone give me a definition of original issue discount? Well, it's the other way around, but redemption value minus the issue price. And remember when we had our little assets being, our interest being withheld, and there was an asset of equal value to the interest being withheld? What was the issue price the bank paid you for that asset? 0. What's the redemption value? Whatever the face value is. So if we spent $100,000 on the checking account for the year, it's a $100,000 original issue discount. Box 2 and 3, you don't have to worry about in this example. Box 4 is the federal income tax withheld. The federal income tax withheld could be the same as box 1. And the amount on box 1 is the same as the amount on box 2 and box 4 on the 1099A. However, it is a practice now to avoid the red flagging system, which again, really you can't avoid the red flags now with the 1099 OID. That's why I'm saying you got to get on the electronic filing system. But you could reduce the withholding by about 10%. And then what you're doing is you're allowing the bank to hold on to 10%, which they can then fractionalize after 3 years, after they've waited the period for you to claim it back, and they can get their money back. Well, so to speak. They can fractionalize it up to 10 times the value, which is equivalent to what you're getting back from them. So box 4 on the OID is the withholding. It could be the same as box 1. A common practice that people are doing is making it 10% less than what's in box 1. Okay? Box 5 on the OID, is 5 the description? It is the description, okay. Box 5, the description. If you read the instructions for the 1099 OID, it has a list of things that typically go into the description box on an OID. The QSIP number of the obligation. Oh, and the title of box 5 is description of obligation. Okay, we're not describing property necessarily. We're describing an obligation. And remember on the A, we listed the property as credit issued or instruments issued or drafts issued or whatever. So there was an issuance of credit of some kind or an instrument of some kind which served as the which created the withholding. So in box 5 on the OID, we're describing the obligation, which is the security or the interest itself that was withheld. And if you read the instructions on that particular section of the OID, one of the possibilities of things you can put in there is it says if the issuer is other than the payer. Who's the payer? Did they issue the security? No. Who did? The taxpayer did. So the taxpayer's name could go in box 6 or box 5. And then box 6 and 7, I believe, again, for our example, we won't be using them. Is there anything after 7? No. That should be it.
Saying to put taxpayer name in box 5?
You could. Description. Again, read the instructions for the form. No, the taxpayer is your straw man. So, interest withheld? No. All caps. Always all caps. Taxpayer is always in all caps. All right. Claiming a return, we do with a 1040. Your 1040 is going to look exactly like it's always looked. Filing status, exemptions, deductions if you take them. If you are taking deductions, the deductions only come out of your non-interest income. So if you get a W-2, if you get a 1099 miscellaneous, that's where your deductions come out of. Your deductions aren't going to be coming out of your interest income. So if all you report is interest income via the 1099 OID, because remember, that's income. When you fill out that OID, you just reported that you had income. And if it was $100,000, well, then you have $100,000 in income that you're going to be paying a tax on. Okay? Now, granted, there's going to be $90,000 in withholding. And for those of you who are familiar with the 1040 and have done them before, you know that when your withholding is greater than your tax, you get a what? A return. Okay? Or a refund, whatever they call them. Okay, so the only lines on the 1040 that change from this process, line 8A and line 64. And then whatever those lines change by virtue of them changing. So, if you're, total gross income or gross taxable income or anything like that will change too. But the only thing different on this form than your usual 1040, and you may have 8A filled out on your regular 1040 if you get interest income, like on your savings account. Okay? All your interest income gets listed on a 1099 or a Schedule B, which goes along with your 1040. Schedule B lists out all your interest income, totals it up. The total from the Schedule B goes on to line 8A. Your total withholdings go on line 64. Do your math, and you're going to see the return you get. Calculate your tax. Do everything how you usually would do it. Okay? All righty. So that's our 3-step process. Now, you guys, we're not coming back. I don't want to say we're not coming back to this because I have a feeling we'll be talking about this forever. But you guys have now had enough exposure to this 1099A, 1099 OID stuff that there shouldn't be any questions you have. Nope, you're done. No more questions. Okay, what is it?
So, when you 1099A abandonment on any particular account, and then you do the OIDs who get to get the funds, that account's still open. So after you get the funds, would you suggest following it up with a 1099A to close it out?
What kind of an account are we talking about? If it's your checking account, I would say no. I wouldn't recommend.
No, like student loans or a car note.
Student loan you wouldn't do that with. A student loan, I guess you could do you're talking about the full face that you got the student loan less than 3 years ago?
Yeah, just say for instance.
For an example.
For an example.
Yes, you could do that. I wouldn't recommend doing that because in reality, if you're getting a return of the full face value through the abandonment process, you should just go pay off the loan with it. That's what I recommend. Okay? Again, we're creditors. We want to help everyone. We want all the banks to do well. We want the credit card companies to do well. And we want our communities to be doing well. So we're always looking, how can I benefit the most amount of people? Okay? Not let's screw the banks or let's screw these guys. No, let's conduct ourselves in such a way in commerce that everyone benefits. Okay? So always be mindful of the path of destruction you may be leaving in your wake.
Would it always be continue to pay off that? Like, would it be to go and pay off the home loan, or just continue to make your payments?
You could just continue to make your payments. Either way, if you just continue to make payments, the bank probably even be happier because they're going to make a lot in interest.
Right. Bingo.
Okay? Oh, wait, we need a microphone back there.
Brandon, you said to remind you about the credit card flow in terms of the acquisition and what exactly has been captured, and if everyone else is okay with that, just to see it on paper, because it seems a little bit different than a promissory note.
Not really. It's really not any different. Here you gotta. Okay, so and you're talking about doing an acquisition, closing out this account. Okay. So I sign a credit card application. They give me a $25,000 limit. So I've got a $25,000 asset over on the asset side of the ledger. I've got $25,000 credit limit is what they call it, but it's basically the equivalent of deposited funds. Okay? So I make transactions on my card, and it creates this withholding up here. Let's say I do $100,000 in a year on that credit card. So $100,000 gets withheld. Okay? That's just transactions. Now, if I'm going to come in and do an acquisition on this, okay, remember, each time I used the card, the funds were withheld up here, so it reduced the amount in here, right? And each time it reduced, they sent you a statement saying, hey, you owe us money, right? And then when you pay it off down to zero, you've basically filled it back up. It's back up to $25K. So, are we talking about a card that's at a zero balance, like you don't owe anything on it?
No, let's just say someone's maxed out the card.
Oh, they've maxed out the card. So now you've got zero over here, right? Okay. So, if I do an acquisition, what would I be acquiring? Well, I mean, in reality, if you maxed out the card, but you maxed it out, we'll say you got the card more than 3 years ago, you maxed it out more than 3 years ago.
This is some people that I know. They're just totally mired in credit card debt right now. They've got like 14 credit cards and they're all maxed out.
Okay.
So we're looking at doing an acquisition for them and collapsing the escrow account.
Okay, well, when they basically, in order for them to max it out, there had to be withholding of $25,000, right? Because it was the withholding of that $25,000 that created this situation here. Okay, and they didn't make any payments. Okay? So if I do an acquisition, what am I acquiring? Right? Does it make sense? You need to see it in your head on paper?
So, Brandon?
So am I going to have to draw your head up here? If they did the charges in less than 3 years, they can get all that money back. They get all the money back, pay off the credit card.
So, but how would it show up, if their current account, say that 25,000 max, was because of late penalties and all that, and take it up to 25,500? What would happen then? Because it wouldn't totally close down the account.
Each time there's the penalties are assessed, you're authorizing those funds as well. So you would do an acquisition for $25,500. Because when that $500 in penalties or interest or whatever got withheld again, it just goes up here.
Brandon, I have a question. So when we do a 1099A, let's say we do an acquisition this year, is there something that we have to report on next year's 1040?
We do an acquisition this year. No, I don't believe so. Not that I mean, 5,000 acquisition. No, I don't see a tax liability being created there. But don't take my word for it. I don't know anything. Okay, so no, I'm serious. No joke. So don't take my word for anything. Do the research. Publication 944 might shed some light on it. IRS publication with in regards to acquisitions and abandonments. Okay, so here's a document email going around. This is actually different, it looks like, than the OID fraud alert that was put out by the IRS, but I cannot authenticate. Who was this put out by? This was put out by the IRS? Okay. Anyone have authentication of this? Yeah. Have you seen it on the IRS website? Yeah. Okay. Okay. Headliner, volume 260, February 19th, 2009. This is recent. The Internal Revenue Service cautions tax professionals to be aware of a refund scheme that has resurfaced in recent months. The scheme, based on false withholding credits, involves the filing of frivolous returns and claims that may contain Form 1099 OID, original issue discount, any type of Form 1099, Form 2439, notice to shareholder of undistributed long-term capital gains, or other bogus financial instruments such as bonded promissory notes to make false withholding claim. Original issue discount is normally treated like the payment of interest, just like we're doing. Any party issuing a financial instrument with original issue discount must issue an information return or Form 1099 OID. Let me read that again. Any party issuing a financial instrument. Any parties in here issue financial instruments? Okay. With original issue discount. What were you paid? What was the issue price? What's the redemption value? Face value. Is there an original issue discount? There is indeed. Interesting that they throw that in there. Any party issuing a financial instrument with original issue discount must issue an information return or Form 1099 OID. Okay? For more information on the correct use of Form 1099 OID, refer to publication 1212, which, again, we included in our reading list. Everyone here should have read publication 1212. Guide to Original Issue Discount Instruments, and Publication 550, Investment Income and Expenses. Characteristics of false withholding claims may include withholding reported on any Form 1099 that is equal to or greater than the income reported on Form 1040EZ, 1040A, or 1040. Remember, we were talking about how a common practice has been to reduce it. Okay? Now, withholding reported on now characteristics of false withholding claims may include. Is it saying that all withholdings? Okay. Characteristics of false withholding claims may include withholding reported on any series Form 1040 tax return that is equal to or greater than the interest income or other income lines on the return. Okay? That means your line 64 is going to match your line 8A. Taxable characteristics of false withholding claims may include taxable income before net operating loss or special deduction on line 28 of Form 1120 that is in an equal amount to a backup withholding credit on line 32G. That's talking about the Form 1120. It's for corporations. It's basically a 1040 for a corporation. Characteristics of false withholding claims may include excessive amounts claimed on Form 1041. That's for trusts, I believe. U.S. income tax return for estates and trusts under other payments, line 24F and or whatever. So again, doesn't apply to us. Characteristics of false withholding claims may include returns with unrealistically high withholding amounts, such as a Form 1099 withholding amount that is 33% or more of the reported income. Okay? Again, may. Is it saying that all returns with greater than 33% in withholding are frivolous? No. It's saying these are the things to watch out for, because the people who are doing it wrong, their 1040s look almost exactly like your 1040. Okay? So keep that in mind, because that's my 1040 when I did mine completely backwards and I got a return. My 1040 looked a lot like what your 1040 would look like. I didn't report all my stuff right, and I was actually reporting the withholding backwards. I was the one withholding it. Okay? But my 1040 looked a lot like your 1040 would look. Okay? And then lack of information return documents to support the withholding credit. What is an information return document that supports your withholding credit? It's the 1099 OID, copy B. Okay, that's why you include your copy Bs of your 1099 OIDs with your 1040. The IRS has successfully stopped the payout of many refunds under the 1099 OID refund scheme program from taxpayers filing both paper and electronic tax returns. However, tax returns containing frivolous information are subject to a $5,000 civil penalty imposed by Internal Revenue Code Section 6702A. The IRS urges tax professionals who question the legitimacy of a withholding credit to confirm with the taxpayer that the reported withholding is actually paid by a legitimate source. Remember we said there's an email in the electronic filings? That's what you're doing right there. The IRS urges tax professionals who question the legitimacy of a withholding credit to confirm with the taxpayer that the reported withholding was actually paid by a legitimate source. Remember, we were talking about how people weren't putting the right sources of the withholding of the interest. Listing vendors. If I pay a vendor, is the vendor withholding my credit? No. Any incident of a taxpayer seeking a refund or promoting a scheme based on false withholding credits should be reported to the IRS using Form 3949A. We've heard about that form. That's it. Thank you, sir. So, again, nobody should be doing anything they don't understand. Okay? Because right there if you read that document and you're not sure if you're doing that or not, then it's probably a good idea to reanalyze what it is you're doing and get back to the roots of the understanding and what's going on before you take any further action. Okay? I'm not saying ignore these notices. You should read these notices and read them very carefully, because the most important things on those types of notices are what's not being said. And you can only determine what's not being said by reading very carefully, word for word, and seeing the structure of what they're saying. The English language is a very tricky language. Ask any attorney. You can use it to say just about anything, and the people reading it might think you're saying something else. Okay? That's the intention of legalese, as we like to call it. Attorneys use a lot of words, put them together, means something, but when you read it, it might not have the actual meaning that they give it, or that the judge is going to interpret it to mean. Okay? So pay very close attention to the use of language. In fact, that's where we're going next week. I want to get into the use of language and admiralty procedures and all that before we get into the DTC stuff with session 11. Okay, so looks like all we got is Kevin. Yep, lost everyone else. Okay. He's a good boy. Alrighty, any questions? Questions? This is, I don't want to say again, it's not your last chance, but you guys, let's try to get through the 1099 OID, 1099A. I mean, after we've gone through all 12 sessions, we can make every class from that point forward all about 1099 OIDs and all about 1099As, okay? If that's what you guys want to spend your time on, we can spend every waking moment on 1099As and OIDs. Okay? Microphone.
As far as the money that goes into your checking account, is it when you're 1099A, the account at the end of the year? It doesn't matter where those monies came from, as far as
the money that went into the account.
Right.
You're not doing an A or an OID on those. No interest was
well,
withheld.
yeah, not the one into the account, but I got you. So it doesn't matter, just whatever's went out of there.
Right.
So it doesn't matter how it got in there, just whatever went out.
Banking has nothing to do with labor or the purchasing of goods. Did everybody hear that? No. Banking, which is what we show when we draw all these ledgers on the board and we're showing money moving around and assets being created and all that. Banking has nothing to do with the purchase of goods or your labor. It doesn't matter that the debit card was used to buy a can of tomatoes. That doesn't matter. It matters that you're banking. You're creating an asset. That's what you're reporting. And that's what you get taxed on. You've never been taxed a dime on your labor. In fact, the Constitution prohibits it. The Supreme Court has upheld that the 16th Amendment, the Income Tax Amendment, didn't give Congress any new powers. Because they're not taxing you on your labor. They're taxing you on your banking. And banking has nothing to do with your labor. Banking has nothing to do with the purchasing of goods. Plain and simple. Everything that happens on these ledgers has nothing to do with where the instrument came from. The fact that I may have performed some services to get the instrument doesn't matter. Doesn't matter. The fact is I endorsed it and deposited it. That's what matters. Or I endorsed it and cashed it. So I got a bunch of bills of exchange from the Federal Reserve for it.
What if you're like you had like unemployment like direct deposit to your account? It's still the same thing. It doesn't matter how it got in there.
No, it doesn't matter where it came from and how it got there. Because in fact, aren't you still liable for a tax on unemployment? Mm-hmm. Yeah, they still tax you on that. Yeah, they tax you on unemployment.
Regarding car loans or versus lease, what happens when you lease a vehicle? Is that actually creating a loan?
Question again. I guess I'm gonna have to someday figure out how a car lease works. You know, I don't have enough data to speak intelligently about it. I've never participated in a transaction such as a lease on a vehicle.
I got that. A car lease is basically whatever if you look at your credit report, the amount of your payments minus the taxes for the duration of the lease.
Wait, you're at your card report?
Your credit report.
Oh, okay.
But the amount that you are when you lease your car, the term of the lease plus your monthly payments minus the taxes, that's the amount that is what your lease is, the face value of your lease. So, for instance, my lease, I had a 24-month lease. My payments were $541. $41 were in taxes. $500 were the actual lease amount. So, total between 24 months and 500 was $12,000. So.
Okay. The only problem I have with the whole lease scenario is that there was no agreement to buy the car. So I see no problem with you claiming the interest that was withheld with all your payments made on the lease. But as far as doing some kind of an acquisition or an abandonment on an original note value, I don't know because I haven't seen the documents of what gets created. Is there a promissory note?
Yeah, there is.
There is? You're saying no. One yes, one no.
When you actually sign the application, because you're still signing the same application.
It's still a credit application,
It's still a credit. It's an actual application. You know, that big old long form that you would sign.
And it's on and they say like you're leasing it for 5 years for $50,000 or something like that.
Yeah, or you're not actually going off the sales price of the car, because that's a total different price.
Right, but they are saying that there's a total mature value.
But they're saying yes. Here's your monthly payment. Here's the term of the lease. If you look on your credit report, it matches up to the payments.
Okay, so if the term of my lease is 5 years,
right,
and my
so
payments are $1,000 a month,
so 60 months.
So I'm paying $60,000 to borrow a car for 5 years.
Yep.
Right.
So on your credit report, it's going to show $60,000.
Okay. Just keep in mind that after you've done the acquisition, you're still only borrowing the car. I mean, in essence, right? Because the contract is you're just borrowing the car for $60,000. So, again, that's why I haven't ever approached this. I've never seen the documents for it or anything, but that sounds logical to me.
I'll show you Friday.
Yeah, seems to work.
If you did the acquisition while you're borrowing it, then they want it back because you collapsed it. Would it cancel the account out?
No, it's just been paid. It's just, there's no more payments. You still get to keep it for 5 years, as far as I know. I mean, and I don't know. Again, it depends on the nature of the contract. The contract might say, hey, man, you pay this off in 2 years, we get the car back. You know, I don't know. You got to read the lease agreement and see what it says. Yeah, you are. But he's saying the terms of it. Let's say you do an acquisition in 2 years, are they going to take the car? Exactly. See, you got to read the contract. You got to know what the contract says. Okay. Any other questions of or relating to this?
Electronic filing. How do you do that?
How do you do electronic filing? Okay. Electronic filing. You're first going to have to fill yourself out a form 4419. It's an IRS form. 4419 allows you to obtain a TCC number, which is a transmitter control code. Okay? Once you've acquired a TCC number, then you're going to need some software to generate the files that you're going to upload. And you can obtain software from 1099fire.com. What was that other one? W21099? There's another one called W21099.com. Oops, that's a 9.
You have to mail in the 4419? Is that
You can fax it in.
Fax it in.
Okay, now you've got a TCC number and you've got some software. Now you're going to need a FIRE account with IRS. FIRE stands for Filing Information Returns Electronically. So if you go to fire.irs.gov, hit Create Account, it's going to ask you for your TCC number. It's going to ask you for all your transmitter information. That's like your name, your address, stuff like that. It's going to fire.irs.gov. Create an account. Once you've got a TCC number, some software, and a FIRE account, you can now do electronic filing of information returns. Now, the only thing that this process is for filing are 1099s and W-2s and things like that, information returns. You can't file your 1040 with this system. Okay? Any other questions? Microphone.
So we can go ahead and proceed with this procedure even if we haven't done the birth certificate recalibration stuff.
Yeah, everything that we've discussed in this class, in these classroom sessions in regards to claiming a return of interest, we've kept it on what I would call the debtor side of filing. We haven't even touched on how creditors file tax returns. And as such, it's not necessary for you to have already established yourself with the accepting for value of the birth certificate, bonding, and all that. That's not a necessity. I recommend it, but it's not a necessity. Okay? When we start getting into the other procedures of dealing strictly on the asset side and filing as a creditor, it will be necessary. Or at least, in my opinion, it would be necessary. Go ahead. Yeah, go ahead.
When you file the 1040 on TurboTax, does that then require you use that year of TurboTax, or can you use it a 2008 TurboTax and just backdate the on the stipulation on each one of the forms? Or do I have to buy a 2004, 2005, 2006, 2007 TurboTax?
They're available. You have to file the. I heard from CPA you actually have to file the 1040s for past year paper-wise. You can do them on your TurboTax, but then you got to print them out and send them in.
Are you talking about 1040Xs?
No, I'm not. I'm just any prior year to 08.
So you can't do any prior years on TurboTax.
You can do them on TurboTax, but you can't.
Yeah, but all it's going to do is print them for you. Yeah, so no. You can't electronically file past years of 1040s. I know, she just answered you.
Yeah, I know, I heard it. I wasn't happy.
I thought you just said that you would only recommend doing electronic. Did I miss something?
Just that was with the 1090 OAD. Okay.
1040s are, I do all mine paper. 1040s doesn't really matter. If you're going to get it frivolous, you're going to get it paper or electronic. You know, what you want to make sure is that all the evidence has been recorded properly so that you can get the return.
Question right here. You explained about credit cards with the example where they were maxed out. But say you have cards that are closed with zero balance, or maybe just opened with just inactivity. When you go through this process, are you going to be getting anything back, or is it just technically it's just closing the account?
If you're just doing an acquisition on an account with a zero balance that's had no activity for the last 3 years, then you're just closing the account.
Okay, and we should do that.
Yeah, I think it's.
How far back? Just 10 years, 20 years?
I
found an old credit report from, I think, 1986 that I was about to toss out. It has all these account numbers and all of the. I'm thinking, whoa.
I don't know. There may be at some point, accounts may close. I know bank accounts typically don't close.
Okay.
Really?
Yeah. No, they never close. Yeah, those are actually used for, anyone know what closed bank accounts are used for? Set-offs and adjustments. Set-offs and adjustments. So, and this is interesting because I like using the circuit model here. Anyone know how electricity works? At least alternating current electricity? Does electricity flow when the circuit is open? No. So there's no current, right? No currency in motion, right? So when the bank's open, there's no current. As soon as you close the circuit or close the bank, that's when the money flows. Okay, that's why set-offs and adjustments are done after hours, and they use closed bank accounts to do the set-offs and adjustments. Because everything at the end of the day has to balance to zero. Okay?
Did I hear you mention a while ago that this is the last year to be able to practice being a creditor or something like that, or
no,
establish
this just
your birth
happens
certificate?
to be a uniquely. It just so happens that, yeah, it just
Like
so
a
happens
leap year
that,
or something?
No, it just so happens that this year, until October, the FDIC insurance on an account you open is $250,000. Okay? Now, anyone care to guess how much it costs for you to open your DTC account? $250,000. You have to October of 2009. Microphones.
What happens after that?
What happens after that?
Yeah.
You pay $250,000 to open your DTC account. Oh, they are? Okay, there you go. So it may be permanent. What's that? Up until October, you couldn't use the method that we will be discussing in later classes of opening your relationship with DTC, so to speak, because the FDIC insurance on each account used to only be $100,000. So if you'd have done a closing on that account to set up your account with DTC, it wouldn't have been enough. You would have been short by about $150,000. Whereas now, it just so happens to be the exact amount DTC is asking for. Now, even if they push for that $250,000 to be permanent, does it mean that the DTC will always be opening accounts for $250,000? No. Watch them raise it in October. Wouldn't that be funny? Well, actually, it wouldn't be that funny. But in reality, the way I see it, because we've gone through our servitude, so to speak. We've served our 70 years in slavery, in bankruptcy, that now you have the opportunity to come out if you want. No one's required to. We can all stay slaves. But they had to open it up so that those who wish to come out of it can. Because you've done your service. You've served your 70 years. You served your 210 years. Yeah.
Getting back to the prior year filing, you do need to get don't you need to get the TurboTax for that tax year though to do that because it's pertinent to that, what the laws were and everything for that year, wouldn't you?
Well, I mean, I wouldn't need TurboTax because I just go into the booklets and I read what are the tax tables for that year, what are the exemptions for that year. Like I actually just read the instructions. That's all TurboTax is doing for you is making it so you don't have to read the instructions. You just kind of follow along. It does it all for you. Calculates your tax, calculates your exemptions. It'll even do deductions, the whole 9 yards. But if you wanted to do that on your own, you could just open up the 1040 instructions and go, okay, and figure it out. Yeah. Anything else? This is the last day we're going to be focused on the 1099As and 1099 OIDs because from this point forward, we got to get into language, admiralty, DTC. We've got some important things to cover after this. Okay, microphones. You have there's one all the way in the back too.
So if we want to have, if we want to be able to file for anything that's going to be using the 1099s, we have to have that done at least 10 days before the end of March so that they have a time to respond.
Yeah. You're talking about when your OIDs have to be in?
Yeah.
I wouldn't wait till the last 10 days. I would get them in like this week. I mean, get them in as soon as possible, because if there's something goes wrong and you don't, you've made a mistake, you want to have time to correct it, and then there'll still be the 10 days of.
Because you can't really do the electronic stuff until we've gotten the 10 days lag between when we send them to the borrowers.
No, you can still send it in, because there's going to see that this is maybe why there's a 10-day delay on your electronic filing. So your electronic filing automatically gives a 10-day delay where you can go in and zap it out.
Okay.
And that's probably why. If you get a response from whoever you sent your copy B to, you need to be able to go in there and change it, take it out, do whatever.
And if we fax it to the borrower, then that speeds things up.
Fax it?
Yeah. Oh, it has to be mailed?
I would recommend mail.
Okay. That's where we do the registered mailing?
No, you could just do certified.
Okay.
And it would be copy B on a 1099A.
Okay.
Earlier on the IRS forms, doing the money order, it says to cut on line. You said to cut on that line. So why are we not cutting on where it says cut on that line for the money order?
Oh, why are we not cutting off the coupon?
Yeah.
I used to, and I would, up until today, I would have recommended that you do the same. But one of the, how many of you are on the Monday night downloads?
I actually emailed him, but he hasn't responded.
Oh, he hasn't?
No. Yeah. Caleb hasn't.
Oh, you've emailed me?
I emailed him and he hasn't responded. I said I went over all of 2008, 2009 on CD, and he hasn't given me the price.
What's that? I have some, but those aren't for
distribution.
Those aren't for those are for those who have financial hardship. If you can't afford $2 a week, come on.
I emailed him. He responded saying, if you acknowledge, all this stuff. I acknowledged back, but he hasn't responded. So.
What's the email for that?
If you just go to resources, the resources tab on the Creditors in Commerce website, you'll see it. It's the top link, Monday night downloads. Well, for those of you who are getting the downloads, which nobody in here raised their hand for getting the downloads, and again, it's the number one So you got yours, right? Yeah. Okay, so you listened to this week's? Oh, okay. Okay, so again, how many of you are receiving the Monday night downloads?
They haven't responded to our email.
No. How many of you have received Monday night downloads? Okay. No, you haven't. You just said you have.
Today. She got one. First one today.
Oh, you haven't listened to it yet. Okay. I'm like, she's not even listening. Okay. Well, this week's Monday night downloads, Jack had on there a young lady who was sharing her experiences. They do a lot up there in Ohio. They're quite an active group up there. And she was just sharing her experiences of what they've been doing. And they've been doing money orders for people. I mean, tons of them. I don't know how many, but she seemed to have quite a bit of experience over quite enough amount of time to say, this is what we're having success with, this is what we're not having success with. And she said that 100% of what they've put in the way that I described it to you goes through. It gets paid. Okay? Without detaching it.
We don't know why, though.
Here's what I think. When you detach it, you're now
accepting it.
Not only that, you're taking responsibility for settling it. Whereas if you leave it attached and you give it to them, it's up to them to settle it. Oh, and also I would always send in a 1040V with that. Remember we discussed earlier, we showed the money order, how to make the payment coupon into a money order. You would always want to include a 1040V as in Victor with that.
What's that?
It's a payment voucher. Okay.
Where do you get that?
IRS website. Mm-hmm. As in Vincent, Victor, verbose, vendetta, vigilante.
I have filed for 2005, 6, 7, and I got an estimate for 2005 and 6, where they estimated how much I owed. I'm not sure if there was a payment type stub on there, the same that you showed.
Were they asking you to send a payment, or were they asking you to send a 1040?
They were kind of doing both. They're like, if you agree, then send the payment.
Right.
But
right.
if
agree
you
and send the payment, or disagree by sending a 1040 and showing us what you actually made.
So I'm going to go home and look at it. Do you recommend that I do the money order? And if I do I then do my 1040?
I would recommend doing your 1040.
Just do the 1040 and not do the money order, right?
I would recommend doing the 1040. If you don't have the time or you're trying to beat a timeline, you may want to do... If you do the money order, though, you're creating more of a headache for yourself if you are going to be doing a 1040 for that.
Because there'll be more stuff to do around that.
It's a lot more to consider, yeah.
Okay.
So, what about if you haven't filed in 8 years? Just like go back 3 years and still just don't.
I hadn't filed in over 10 years.
So I don't
but I didn't have any liability. Did you have liability?
I don't think so. Everything was like just,
If you didn't have any tax liability, there's nothing to worry about. If you don't have any debt with them. If you have a debt with them, plan on whatever you owe them being taken out of your return.
Right. But still just keep going forward with like going back and...
Have you heard of anyone sort of doing this and then being audited?
I know of people who've been audited, but I don't know if it was in relation to the OID. There's one gentleman who participates in our Tuesday night calls, and I know he had an issue with an audit, I think, but I don't think it had anything to do with OIDs or anything, or returns. So no one that I know has been audited for this. But again, my experience is limited.
So Brandon, you've been successful at receiving payments from the Treasury using these strategies yourself?
No, I did it completely wrong and got a return. Okay? So don't, again, just because somebody gets a return doesn't mean they did it right, doesn't mean you should copy what they did. Because if I was instructing you to do what I did, you guys would be cleaning up $200,000 messes like I'm cleaning up right now. Okay? So yeah, just because, and again, that's why I always like to say, don't base anything you do on somebody else's success story. If you don't have an understanding of it, just don't do it. You have to have an understanding of what's going on in all aspects and all facets, because if you're basing, because that's what I was basing my original filing on. I was like, oh, so-and-so did it this way. They had success. This must be the way it's done. And I was wrong. It's not the way it's done. And if you know what you're reporting, you'd realize that I had totally reported everything backwards and wrong. So there's no way I should have gotten a return. I just happened to get a return. And the fact that other people had successes with it before me doesn't mean that that's the way to do it. Because the people who had successes before me doing that same method, they're probably the ones dealing with those same kinds of messes right now. Where the IRS is like, hey, you owe us $500,000 now. And they're running around, where am I going to get $500,000? You know? What's that? Turn into a money order. But see, they didn't know enough. They probably didn't even know enough to do that.
Brandon, how did you get a return and a $200,000 tax bill?
I got the return first, and then It's called self-sabotage. Okay? Here's how it goes. You basically, you open up a bank account online with no ID, no signature card. The only activity you've ever had on that bank account was the initial deposit, and then you get a direct wire transfer for $150,000 from the Treasury. And then you walk in and ask for a cashier's check for $150,000. I set off so many freaking red flags. They thought I was a terrorist, embezzling, and money launderer. There's no way this guy could be above board doing this kind of stuff.
You didn't mention you were wearing a hoodie and you hadn't shaved. Sunglasses.
Yeah, so I set off every red flag in the book, which was a good thing, because that really saved me. Because if I wouldn't have set off all those red flags and I would have just kept that money and started maybe just writing checks out of it or whatever, it would have ended up hurting me more in the end. Right. But because it set off immediate bells and whistles and flags and everything, CID was immediately brought in. So CID got involved right away. The CID agent froze the funds right away. He transferred them out of my account and said, "I'm protecting you, dude." And he was. He was protecting me. He's like, "I'm just going to make sure you've done everything right. If you've done everything right, you'll get the funds. So, but if you didn't, you won't be in trouble for it." Okay? So he basically saved my butt. The CID agent did by withholding or by freezing those funds. Criminal Investigation Division of IRS. They're the accountants with guns.
Brandon, how do you find out you have liens on your? On your
I'm like looking for the microphone.
How do you find out you have liens on you, or some transcripts, or how do you find that information? From the
If
IRS?
you want to get a transcript, you can fill out a form 4506T as in Tom, and that will get you. You could do up to 4 years at a time on each form, but you could send in multiple forms. I believe you could fax those in too if you read the instructions for that form 4506T.
They actually sent me a letter saying that they haven't put out tax lien on my checking account, but then when I called them, they said they wouldn't do anything until like over a certain amount of money would go into the account. So it's been there for like years.
Oh, they have a tax lien on your account?
Right.
And they're not going to do anything on the account until a certain amount of money goes in.
Yeah, like they said, they don't do anything unless like 20, 30 grand hits it in like a lump sum or something like that. Then they'll go with the job.
Yeah. So I actually have experience with that too, but that's years ago. It has nothing to do with taxes.
So I mean, same thing though. Like I just still go about doing this thing because they're gonna get their money in me collecting, right? Past tax will come out, so then it won't. The judgment or the lien on the account, the current checking account, it won't be there, or.
Yeah, I mean, you may want to try to handle the lien before, if you can. Yeah. Okay. So yeah, it's either going to get handled when they freeze the account and take the funds out of the account, or it's going to be when you attempt to get the return, and before you get the 1040, they do some kind of recalculation, say, "No, we found out you owed us this much," and then they'll send you the check. And then your account should be fine because that should be released the lien, but you should make sure, like, "Hey, remember that lien? You got paid. Did you release the lien?" You know, kind of thing.
Can't you call them and request a payment voucher?
You can try. Hey, Kevin, are you listening? Keep.
Is he muted?
He's muted. Hey, Kevin, Dashner, you awake? *6. Okay. No, I didn't mute him. I mean, let me unmute him and make sure. Kevin. Yo, Kevin. All right.
I fell asleep on Tuesday night's call. Like 2 hours later.
And that was actually a quick and to the point call. Some of our calls drag on for 4 hours. That was like a 2-hour call. I was pumped on last week's call. I was like, yes, got a lot done. It happened fast, in and out. Do you have a mic?
Yeah, I got a mic. I just wanted to make a comment on Kevin. We had a kind of a Kevin call last week, and I think forgive me if I got the wrong name, but I think it was Bryce that spoke up because somebody asked, it was a newbie that said, has anybody actually gotten returns using this method? And he said, actually, the last couple weeks, people have been getting checks back from the Treasury using Brandon's process exactly. That's what
really?
he said, yeah.
Great. Brandon still hasn't got his in using his process. So it figures. It just figures. That's like when Sergio's not here. It's like when Sergio told me about his 1099A. I was like, shit, I gotta get my 1099As out. He basically logged into his online bank account for his mortgage. He's all, oh, the balance is gone. I'm all stoked. So I immediately put all my 1099As in envelopes and sent them out. All right, this stuff works. See, I'm waiting for you guys to have a success before I do anything.
When you send out...
That's why I'm so full of information. I'm like, oh, yeah, go ahead, try this, and then try that. Let me know how it goes.
You mentioned in last week's class that when you send out the 1099As, copy Bs to the lenders for acquisition, I mean, not to the lenders, but to the banks for acquisition, to write something in the front of the letter saying private or on the, or exactly.
Yeah, to get the, if you're sending out a copy B of a 1099A, and you're looking to have the credit posted to your account or the account closed or whatever, what I've been doing to get it routed to the right place, because basically you want it to somehow get to the accounting department of whoever you're sending it to, because only an accountant knows what to do with 1099A. So I don't recommend you send it to wherever you send your payments to, the payment processing center, because they're expecting checks and they pull out 1099A. And they're going to think you think it's a payment. And it's not going to get routed to the right place. So what I do is I send it to the headquarters of the corporation, and I put a statement on the bottom of the envelope that says, important, in red, bold. And then after important, in black, I have federal income tax or federal tax documents enclosed. That's it. What's that? No, it's printed on the envelope. Looks official.
How about if it's going to the FTB?
Yeah, it's important. Federal income tax forms and huh? Can you put it on what label? Oh, on the address label?
Not a label.
I guess. Just don't make it part of the address.
Wait, that's going on what?
The envelope that you send your 1099A copy B to the bank. Copy B is for the borrower. Yeah, you'll catch up when you go through the other audios, the other videos for the classroom session. Yeah, you'll catch on to what it is.
Yeah.
Nope. Maybe on the second time around. First time around, give them a chance to be competent and assume they know what they're doing when they get a tax return or a tax form. Okay, it's like, I mean, if my employer sent me a W-2 with an instructions, you're supposed to include this in your income taxes. Make sure you put it here on your 1040. I'd be like, what does he think I'm retarded? But in reality, they are retarded, half of them. So you might need to send a letter, but I wouldn't do it on the first time around. First time around, let's presume they know what they're doing and that they're going to ledger it properly. If after 30 days or the next return or the next statement you get doesn't have a zero balance, then you might want to, we're out. All right, let's just wrap it up.
Did you go and say what you were getting to on this Monday night downloads? I think you got distracted off of that.
Oh, no, he said it.
I did.
Oh, okay.
All right. All righty. We're going to wrap it up, you guys, because we're out of tape. No, it's just you just get a. They basically have a classroom like this, and they do what we do, except they just record it. They don't have phones or anything interacted with it. You're just getting a download of someone else's class. But it's Jack, and Jack really knows his stuff. All right, thank you guys.